Good morning, Ramesh ji. Making you host. Hold on.
Okay, okay.
चालू नहीं हुआ है.
Good morning, Ramesh sir.
Yeah,
Good
Ramesh, you
morning.
are host now.
Yeah, thanks, Rohit. Chuk sir, are you there? Hello. Somebody let Chuk sir in, no? I think he's waiting.
All are in the meeting, Ramesh. Admitted all.
Chuk sir?
Ramesh ji, I am reclaiming host rights.
Yeah,
I'm
yeah.
stopping the videos for all.
Okay, okay, okay. So wait, let me talk to Chuk sir.
Hello. Ramesh sir, am I audible?
Yes, sir, you are there. Okay, sir,
Okay.
you're audible.
Yes.
Audible.
Now, your whole picture is not coming.
Yeah, he's muted. I mean, he's
Okay.
turned out the video Rohit has. He'll shortly
Yes,
switch
sir.
the video on. Rohit?
Yes, ji.
Oh, you turned off the video, no, for everybody?
No, yours is on. Mahesh, Chuk sir can switch it on. I have not switched off for everyone.
Okay,
Those
okay.
which were on, I have switched it off.
Okay. You switch on for Chuk sir also, no? Hello.
Chuk sir, I have requested you to switch on your video. Please switch on.
Okay, sir. Rohit sir, please see if it is okay.
Raja.
We are not able to see your video. It's a dark space.
Dark space. I have already clicked the video.
Any presentation, if you have, you can
Yeah.
switch on the presentation.
It is in the laptop backside background.
Others are requested to please mute.
So please see if the screen is shared.
नहीं आ रहा चुप सर, नहीं आ रहा.
मेरा स्क्रीन कैसे शेयर आएगा?
आप स्क्रीन शेयरिंग पे जाके कर दीजिए, हो जाएगा.
स्क्रीन शेयर
नीचे ऑप्शन मिलेगा शेयर करके, शेयर दिख रहा होगा.
शेयर है सर. हाँ जी. You can send request. Sharing is not turned on.
एक मिनट.
You can request multiple presenter.
I have enabled sharing to all.
I can minimize and my presentation will be seen.
नहीं, अभी आपका स्क्रीन शेयर नहीं हुआ सर.
मैं शेयर पे गया रोहित सर. इसके बाद
शेयर पे जाइएगा और पूरा कंप्लीट स्क्रीन शेयर, एंटायर स्क्रीन शेयर कर दीजिएगा.
सर इस हमारा शेयर्ड राउंड आ रहा है और ऑप्टिमाइज योर वीडियो शेयरिंग।
नहीं, लेफ्ट साइड में देखिए, उसके स्क्रीन होगा, एंटायर स्क्रीन होगा या एप्लीकेशन विंडो होगा?
एंटायर स्क्रीन है सर।
एंटायर स्क्रीन कर दीजिए, नीचे शेयर होगा, शेयर कर दीजिए।
एंटायर स्क्रीन को क्लिक करके शेयर कर दो।
हम्म,
अच्छा
अब आ
देखिए
गया, अब आ
आ
गया।
गया।
हाँ, अब आ
ओके,
गया।
ये दिख रहा है ना सबको?
हाँ, दिख रहा है, दिख रहा है।
ठीक है सर, ठीक।
Ramesh ji, I'm giving you the host sites now. You are on mute, Ramesh ji.
I'll remove a mute.
No.
We are starting the session. Ladies and gentlemen, welcome to another session of pre-promotion exam training. Today we have motor insurance, which is being handled by Mukesh Kumar Chugh sir, Chief Manager, Head Office. He has already handled classes for new recruits. The training is going on in Chennai. As usual, my request is kindly mute your microphone so that no external noise is there and our faculty sir will not be disturbed. For me, it is so many 147 members, but for you people, it is only one yours. So kindly see that the microphone is muted. There will be a
Ramesh, please unmute. I think you are on mute. So by mistake, you have been muted.
Okay, okay. Now
Now
there will
this is
kindly all of you mute your microphones except Chuk sir. I will also be muting my microphone. There will be a question answer session in which you can clear all your doubts. Now I hand it over to Chuk sir. Sir, the room is yours. You can
yeah.
go ahead, sir. Thank you.
Thank you, sir, Ramesh sir and Rohit sir. I wish you all the best and congratulate you for doing this novel course for strengthening our officers by providing them with technical knowledge and subject for the exam. And good morning to all of you.
Good
I
morning,
wish you
sir.
all the best.
Good morning,
Wish
sir.
you all the best. Wish you all the best for your exam. I wish you success with very good marks. So today we will be taking a session on motor OD, underwriting as well as claims. And as the subject is very lengthy, we have focused our study based on the exam pattern and the questions asked, how we should prepare in a lesser time and focus on important things, right? So we should enter into the subject with some basics and then we'll be doing latest circulars and trends. So with introduction, Mota is the largest portfolio of general insurance industry, around 35 to 40% of premium is coming from this sector alone. So this is very important, fascinating, and our bread earner also. A major cash flow comes from from motor portfolio. So motor should be known to all. And if we go back in history of the motor insurance, it roots back in UK. And first motor policy was launched in 1894 in UK. And first motor third party policy was issued in England in 1895. So compulsory third party insurance came in vogue after First World War I, when there was large increase in number of vehicles requiring issuance of third party policy to protect the lives and property of third party. Thereafter, Road Traffic Acts 1930 and 34 came, and later amendments came. Then Motor Vehicle Act was also followed by 1939 Act, Base Act. Currently, Motor Vehicle Act is also amended by Motor Vehicle Amendment Act 2019. Most of the provisions have been amended, and we will be touching upon whatever is required from our insurance point of view. In TP class, most of the sections will be relevant for you. And in motor insurance, if we see the practice of insurance deeply followed, majorly followed UK market, we are also following the same. And in motor, we are following our India motor tariff 2002, which were de-tariffed in 2006. From 1st January 2006, there is no tariff. Tariff consists of three parts: rates, rules, regulations. general rules and regulations and policy wordings. So the tariff containing the rate part was de-tariffed from 1st January 2007. General rules, regulations or GRs and our policy wordings, IMTs, exclusions, coverage, everything remains same. So we are following the same till today also. Although tariff is completely withdrawn and insurers are asked to issue their own policies, terms, conditions, file their own products, which we will study later on. But it is in the initial phase and we are still following tariffs. From exam point of view, you should know that tariff does not exist now, but we should have broad idea. That's why we will be covering the same also, because that will be a guide for further innovation and development of new products. So rates were de-tariffed and every insurer is issuing policy under file and use and file guidelines. If we see the current scenario, motor insurance, there is a high loss ratio in OD as well as TP, and the premium rates are governed by IRDAI. Rates are made by Ministry of Road Transport Authority in consultation with IRDA, and currently the rates issued by IRDA from June 2022 are applicable. So there is a future growth increase in automobile as the number of vehicles are increasing. So there is a great scope in increase of motor insurance business, and high penetration is there through private players also. And cashless claim service, as you know, is there and it is demanded by the customers. High volume of claim is there, and requirement of standardization is the necessity of the hour to bring about better experience in motor portfolio. So litigation cost is also increasing in motor TPUC, and IT is playing a major role currently through, as most of the policies are issued through online mode, digital mode. We are covering major sections of the country through this digital media. So technology is very important. Similarly, frauds and competition are also on the high side. We have to be vigilant to take care that frauds are timely detected, and proper mechanism should be there. And to fight competition, proper policy rules, regulations should be followed. So new trend in business, claims are increasing. So our major concern is that the claims are settled in time, intact. And wherever standardization is not there in our processes, we need to standardize the process and use more IT to streamline the process and avoid the repetitive tasks so that claims are settled in time. And litigation cost as it is arising, so careful underwriting and claim settlement should be properly done so that unnecessary grievances or litigation costs should not rise. Fraud risk are increasing, so we have to take care and prepare fraud risk management system, which should be capable enough to detect the fraud and provide triggers and necessary mechanism to fight back the fraudulent activities. Competition should be fought in a proper manner. What are the challenges? If you see, there is an adverse selection of business. That's why our claim ratio is increasing. So proper underwriting is a requirement. And moral hazard is also there. Kindly mute the microphones. Yeah, moral hazard is also there in motor insurance. So we should also not ignore it. And distribution of insurance products should be proper. Information should be collected in a proper manner. Adequate information should be there so that proper underwriting can be done. As you know, a contract, what is a contract? Contract is an agreement between two persons to do or not to do certain things as per Indian Contract Act 1872. So our motor insurance contract is also a contract. It complies with all the essential ingredients of a contract. So a contract consists of offer and acceptance, consideration, legality to the contract, capacity to the contract, and performance of the contract. Likewise, in our motor policy, it is a contract which complies with all the requirements. Offer is made from the side of proposer, and acceptance is made by given by the insurer. So it is their consideration for the insurer. The consideration is premium, and for the insured, consideration is the promise given by the insurer. So consideration aspect is also there. Legality to the contract. Our contracts are very much legal. It is in written form, and if anybody is aggrieved, that can go in the court of law and to enforce its rights. So capacity to the contract, yes, major person or above 18 years old. Hello. Kindly mute the phone, sir. Hello. Voice is echoed. Hello. Am I audible to all of you? Am I audible?
Certain phones are not muted.
Yes, sir, you are audible, sir.
Kindly mute. Certain phones are unmuted.
Yeah.
We are listening to background voices.
Am I audible and reachable to all of you?
Yes, sir.
Yeah. Now, performance of contract is also there. In case of any claim, we are very much in a position to complete the contract as per terms and condition of the policy. So all these essential ingredients are also there in our motor policy and motor contract. And please note, motor insurance contract is a contract of indemnity. Means to place the insured in the same financial position as he was prior to the loss or accident, except this compulsory PA cover. So in addition to all the essential ingredients of a Indian Contract Act, we also follow some principles of motor insurance, because insurance is a contract of trust. That's why these essential principles are also required to be adhered to. First of all is utmost good faith. So proposal form is the most important document which gives details of the risk from the insured side. So we are collecting details from the insured. Declaration is made by the insured. It is a contractual obligation on the part of the insured to give all the details to and best to his knowledge and belief, and it should not be misleading. There should not be any misrepresentation. Also, the insurers are duty bound under utmost good faith to provide proper information and guide to the insured also. In case of breach of utmost good faith, suppose there is a misrepresentation in the contract given by the details given by the insured, so the insurer gets the right to come out of the contract, make the contract void or voidable. So this is utmost good faith. Insurable interest. So the insured having insurable interest in the vehicle can get the vehicle insured, right? It is a legal relationship between the subject matter and the insured. That is his vehicle and or liability, which gives him right to get the vehicle insured under motor vehicle policy. So parties to the contract may be seller, owner, seller, buyer, hire purchaser, hire vendor, hypothecation, joint venture, joint owners, motor traders, hotel owners, legal heirs and users, all who have got insurable interest as per law are entitled to get the insurance cover. Right? So difference between hire purchase and hypothecation is there. Hire purchase means financier to remain owner of the vehicle till last installment is paid. Until last installment is paid, hire vendor has got the full right in the vehicle. Whereas in hypothecation, the ownership of the vehicle vests with the owner only, and the hire vendor is entitled for the balance amount which is unpaid. But from our insurance point of view, both are same. We cover the interest of financier under hypothecation agreement, wide agreed bank clause. In case of partial loss, claims are paid to the user or owner of the vehicle, and in case of total loss, the claim is settled in favor of the financier. So this is the main thing to be noted. Indemnity, as I have told you, that motor insurance contract is purely a contract of indemnity to place the insured in the same financial position as he was prior to the loss. He should not make any benefit. He should not be suffer adversely. Means he should be adequately indemnified. So what we pay in case of total loss or constructive total loss or theft of entire vehicle IDV, whatever IDV is agreed, we pay. This is contract. Less excess amount. Compulsory excess is there, which is to be deducted from each and every claim, whether it's a partial or total claim, total loss claim. In case of repair loss claim, what we pay? Cost of replacement of parts and repair, less depreciation and salvage and excess. So this is the formula you keep in mind. It will be very helpful in making practical questions, settling practical questions. In TP claims, awards are made by the MACT, and the interest and legal costs, etc., whatever is awarded is given by the insurer. CPA claims are also there. Compulsory PA claim for registered owner driver having valid license. So the sum insured stated in the policy becomes the amount payable in favor of the legal years of the insured in case of death of the registered owner or nominee in the policy. Subrogation in case of total loss or theft, whenever rights are there, these are to be transferred to the insurer. After making payment of claim for a theft claim, then if vehicle is recovered later on, that will belong to the insurer because he has settled the claim. So all the rights which the insured was having before settlement of the claim in favor of the vehicle are transferred to the insurer by way of subrogation. So there is some modification by way of no-for-no agreement. It means for an accidental or partial losses claims or in motor OD claims, if there is an accidental loss between two vehicles belonging to different companies, those companies will not exercise this subrogation right against each other and will settle the claim as per their own policy terms and conditions under the contract. If this is allowed, then a number of claims will go in the court and justice will be delayed. That's why no-for-no agreement is prevalent in motor OD claims. But in TP claims, it is not there. Please note. Whenever TP claim is there, more than one vehicles are involved and they are found guilty based on negligence criteria. So each company will be settling claim as per the negligence percentage of the insured driver or owner. Insured is also required to cooperate the plaintiff and in legal suit of recovery. This is also a condition. And in case of contribution, if the vehicle is insured with more than one insurer and there is liability under the policy as per policy terms and conditions, so each insurer will be liable to pay its rateable proportion of the loss to protect the principle of indemnity. Proximate cause is very important because it is the active, efficient, dominant cause of the loss. It is to be seen that if there is any loss or damage, it is due to insured peril only. And it is not a remote cause to the loss. It should be dominant cause, active, efficient cause. Causa proxima non remota spectator. So proximate cause comes into picture when more than one perils are in operation at a time. So this proximate cause theory gives you the criteria to determine whether the loss has been caused by this insured peril or uninsured peril to decide upon the liability under the policy. Now we will move to the definition of motor vehicle. In motor vehicle insurance, we are covering motor vehicle. So we should be able to know what is motor vehicle. Motor vehicle has been defined under section under section 227 of Motor Vehicle Act 1988 as a mechanically propelled vehicle. So mechanically propelled vehicle. So mechanism is there to propel the vehicle. It is adapted to use upon road. It is running on road and power of propulsion is coming either from internal side or external side. Engine is there and it includes chassis to which a body is attached. And it also includes a trailer, but does not include vehicle running on fixed rails. So this definition should be kept in mind while doing motor vehicle insurance. Underwriting of motor insurance business is also a professional approach. We should adhere to the underwriting principles while underwriting the policy so that we do not run into unnecessary losses. So underwriter is required to determine the risk in a proper perspective. He should evaluate it properly and determine what type of cover should be given. It depends upon his risk assessment, premium calculation, and coverage terms. So after doing evaluation of the risk and deciding what type of cover is to be given. And after proper analysis of this risk assessment, we decide what type of risk coverage should be given, like limited coverage under liability policy, or liability with fire or theft, liability, fire and theft, liability, fire, or liability or theft, liability and theft, or package policy. So it depends upon the condition of the vehicle, past loss experience, and pre-inspection report wherever there is a break in insurance. And premium is calculated as per motor tariff. We will be studying later based on the age of the vehicle, mainly IDV, zone. These are the main important factors. So important factors are coming down. Vehicle. So we should also see the vehicle, what type of vehicle it is. It's a private vehicle, commercial vehicle, two-wheeler, and use of the vehicle. What is the use? Private use, commercial use, who is the driver? Although we are not seeing driver right now, who is driver, what is his age, physical condition, sex of the driver, etc. Because these underwriting factors are being looked in foreign countries also. So in nowadays we are also focusing upon to take into account driver details, because it is very important and a major factor in causing accidents. So claim experience of the vehicle should also be seen. Past loss experience gives you a guide to decide what type of cover should be given or to avoid the cover. But statutory cover for liability cannot be avoided upon. Please keep it in mind. It is the requirement of IRT. And vehicle safety features, if these are there or not, what type of safety features are taken by the insured. And the general guidelines issued by the head office of each insurance company should also be taken into consideration while underwriting the risk, evaluating the risk, and deciding upon the coverage and premium. So what is a proper underwriting? Proper underwriting helps in weeding out the bad risk. As I have told you, there is adverse selection of risk. So if your underwriting is proper, you are better managed to take this proper risk, adequate risk, and your growth with profitability can be measured or seen. But if you are running into adverse selection, then you will be definitely running into losses. So proper underwriting should be done, and ensure that customers pay the right amount of premium. So adequate amount of premium is also required. In this competitive age, we are giving so much discount. Although risk is good, but we are not charging commensurate premium. In case of any claim, definitely the claim ratio will again become worse because we have not charged adequately. So our rating structure and discount structure should be as per our own experience, our history, our actuarial valuation, our past claim experience, and also of course market trend. And in any case, you see that a premium should be adequate to cover the loss ratio. If the premium is not enough, then the good risk will also become bad, and sooner or later you will be out of the market. And proper underwriting helps us in being stable. So because we are giving proper cover, proper selection of the risk, charging proper premium, so we are stabilized in the market and able to pay our claims. In motor insurance, as I told you, the brief history and the current practice, how we are going, proper underwriting should be done. Now we will study how motor insurance is being rated in India. Currently, transactions of motor insurance business in India is done through India Motor Tariff 2002, which came effective from July 2002. But as I told you, it is also withdrawn from 1st January 2007, right? The insurers were later on allowed to give discounts in their rates. All the rates were followed as given in the tariff. Terms, condition, policy wordings, endorsements, IMTs, exclusions, everything remained same, right? Then IRDA permitted from 1st April 2009 to bring about additional add-on cover as per the market requirement. For example, nil depreciation cover. There was great demand for nil depreciation cover or zero depreciation cover, or in the market, bumper to bumper cover. By that cover, no depreciation is charged in partial loss claims at the time of claim settlement. So insurers were allowed to file their own add-on products and get the product approval, and you can sell the same in the market. Likewise, a number of products were launched by many companies. We are also having at United India more than 17-18 add-on covers, and many others are in pipeline. It depends upon the market research requirement and the analysis which we make. Motor tariff consists of 8 sections and 49 GRs. From the, as this is withdrawn, you keep it in mind. But for a broader idea, we have to know what is the tariff and major sections and guidelines, right? Section 1 deals with the general regulations. Section 2 deals with private car. Section 3 motorized two-wheelers. And Section 4 commercial vehicles, GCV, and this trailer, tariff for trailers, PCV, passenger carrying vehicles, miscellaneous and special type of vehicle, motor trade policies, motor trade road risk policy, transit policy, and internal risk policy. So all are coming under Section 4 commercial vehicles. Section 5 deals with proposal form. Section 6 deals with policy wordings. Section 7 IMTs, and 8 about the statistical codes. So now we will just run through the major GRs for our exam point of view. GR1 deals with insurance not provided for. So motor insurance is not provided for outside India. So geographical zone is the territory within which motor insurance cover is there. And motor insurance policies are basically issued for 3 types of vehicles. So vehicle classification has been made: private car, motorized two-wheelers, and commercial vehicles. Proposal form is there as per GR2. Proposal form is mandatory because insurance is a contract of indemnity. So as per utmost good faith, we have to take material facts from the insured which help in underwriting the policy. So proposal form is taken for fresh insurance and rollover business also, or whenever there is material alteration in the risk. When renewal comes, there is just change in IDV as per GR8. So there is no need for taking proposal form again. Policy forms, if we see, there are basically 2 types of policy forms issued: liability and package. So liability covers compulsory third-party liability of the owner of the vehicle in respect of third-party death, injury, property damage. And it also provides cover for CPA cover, compulsory PA cover for owner driver. It compulsory PA cover premium is accounted under liability section. Package policy is a combination of both liability as well as vehicle. So there are 2 sections, liability and OD section. We can also restrict the cover, as I told you: liability with fire, liability with theft, liability with fire and theft, or in some cases for fire and theft only when the vehicle is in garage. So these are the various further versions of these 2 policies only. Basically, there are 2 types of policies. So rating is there as per tariff. These are the minimum rates, and for adverse rating, adverse claim experience, we charge 100% loading, and for further adverse claim experience, we can charge more than 100%, but not more than 200%. Again, rate is not so important because all have become D-tariff. It is just for information. Geographical area, as I told you, is India, but if the vehicle is going for in these SAARC countries like Bangladesh, Bhutan, Nepal, Pakistan, Sri Lanka, Maldives, so premium rate can be loaded. We can grant this extension. For package policy, we cover the risk of geographical extension by charging 500 premium. It is applicable for 1 country or 2 or more, wherever you go. But premium will be 500 plus GST. And for liability section, it will be 100 rupees. Please note that extension of cover does not apply when the vehicle is between India and other country. So in between, there is no liability. Cover for damage to vehicle or injury to its occupants, TP liability for vehicle during air passage, sea passage, or for the purpose of ferrying vehicle to extended geographical area is excluded under the policy. From exam point of view, you should know that when the vehicle is leaving geographical frontier of India and until it reaches the extended geographical area, there is no coverage. So if there is a claim, it is not covered. Our coverage starts for extended geographical area once the vehicle reaches at that place. So vintage cars are those cars which are manufactured prior to 31st December 1940. And these are duly certified by the Vintage and Classic Car Club of India. We allow 50% discount on OD premium and 50% discount on TP premium also for vintage car. Special rating is allowed, right? Policies are issued on agreed value basis. And classic cars are those cars which are manufactured after 31st December 1940, but before 31st December 1970. These are also certified by Classic Car Club of India, and no special rating is there, no discount is there, and no agreed policy is issued. So this difference should be known to you. Sometimes in exam, it is asked. Valued policies are not permitted except for vintage car. I told you, valued policy or agreed value policies issued only for vintage car and not for others. Now the concept of IDV is very important from exam point of view for all the aspirants from scale 1 to 4. Keep it in mind that IDV is insured's declared value and it is deemed sum insured under the policy. It is fixed at the inception of the policy and it is not changed during the currency of the policy. Once it is fixed, it is fixed for the whole currency of the policy. Number one. That there is some decided formula how the IDV is to be fixed. We take ex showroom price of the vehicle or listed selling price of the vehicle, listed manufacturers selling price of the model of the vehicle for deciding the IDV. This is the initial stage. Then all applicable taxes are added. This becomes ex showroom price. Got it? But we do not take registration charges, road tax charges, and insurance charges. These are excluded. IDV is the insured manufacturer's listed selling price. For first year, how we decide? We take this IDV and deduct 20% because we are issuing policy for 1 year. Up to 1 year, there will be depreciation. Sorry, for first year, we are charging depreciation rate at 5%. It means listed selling price of the vehicle is reduced by 5%. This will become IDV for the first year. From second year onward, from second year, we will be reducing 20%. For third year, we will be reducing by 30%. Fourth year, 40%. Fifth year, 50%. So there may be question in the exam. They may ask you to decide IDV of the vehicle, giving the date of registration and the period of insurance. So you have to see age of the vehicle for taking into account the depreciation percentage. Age of the vehicle, how to be seen? It is to be seen from the date of registration of the vehicle, not from the date of manufacture of the vehicle. It is to be noted. When the vehicle is registered, it means insurance cover starts from there. And for the year we are insuring, we will be deducting depreciation to arrive at the IDV. So this is decided and kept in the policy and premium is charged on it. For total loss claim, or CTL claim or theft claim of the entire vehicle, this is not open. It means whatever is decided is final. So we should be very careful. IDV chart is there, formula is there under GR8 of motor tariff up to 5 years age of the vehicle. If the age of the vehicle is more than 5 years, then it is decided mutually based on the market value of the vehicle. IDV is applicable for total loss claims because partial claims IDV is not applicable. Why it is not applicable? In partial claim, when we pay the claim, the sum insured is not reduced. So sum insured is not the criteria. But in fire claims or engineering claims, you see it is very important. In health claim also sum insured gets reduced. Fire claim also gets reduced. So the reinstatement of premium is charged in fire to reinstate the sum insured to its original position. But in fire, when we pay partial loss claims, then sum insured is not reduced. In CTL claim, if aggregate cost of retrieval and or repair exceeds 75% of the IDV, then we settle the claim on total loss basis. Means we pay IDV minus excess. IDV will not change during the policy period, as I have already told you. And this IDV will be seen on as is various basis in case of total loss claims. So while comparing, I will show you how we see how it is applied. So IDV is very important. Keep it in mind how it is decided. This formula should be in your mind. This table you have to learn. But for motor trade policies, we are not detecting any depreciation like to arrive at the value. Whatever trade in the manufacturer or the dealer is giving the value, we are charging premium on whole. As motor insurance contracts are contracts of indemnity, so the insured has to be placed in the same financial position as he was prior to the loss. To take care of this principle, depreciation is there. So we have to apply depreciation in all partial loss claims. In total loss claims, depreciation is not there. Total loss claim, CTL claim or theft claim. So partial losses are subject to depreciation. So depreciation is based on the type of the part. It is applied on the parts only, not on labor charges. How we charge for rubber, nylon, plastic, tire, tube, battery and airbag? Straight away 50% is reduced, is charged for depreciation. For fiberglass component, it is 30%, and for glass, it is nil. For metal, wood, and other parts, up to 6 months, nil depreciation is charged. More than 6 months, but less than 1 year, 5%. More than 1 year, but less than 2 years, 10%. Then less than 3 year, 15. Less than 4 year, 40. And less than 5 year, 35. Less than 10 year, 40. And more than 10 years, 50%. So this table should be remembered by you. We will be solving question later. It will be very helpful in deciding the claim amount. When the insured takes nil depreciation cover or zero depreciation or bumper to bumper cover, this depreciation is not applicable because he has paid the premium. So depreciation will not be charged. The contract of indemnity gets modified to this extent. For underwriting, geographical zones are there. India has been divided as per geographical zones to underwrite the policies and for the purpose of rating. Private car, motorized two-wheeler, commercial vehicle in section C1 and C4. C1 is taxi up to 6 passenger and C4 is the commercial two-wheeler. So in commercial section, 2 vehicles are there, taxi and commercial two-wheeler. Then private car and motorized two-wheelers. So 2 and 2, 4. 4 vehicles are there, for which there are 2 zones, zone A and zone B. Zone A rate is higher than zone B because claim ratio is somewhat high, loss experience is somewhat bad due to population and other factors. Zone A consists of metropolitan cities along with Ahmedabad, Bangalore, and Ahmedabad, Hyderabad, Bangalore, and Pune. So Delhi, Chennai, Kolkata, and Mumbai, plus Ahmedabad, Hyderabad, Pune. So these are under zone A, right? And rest of the country is falling under zone B. So rate are there as per this categorization. Commercial vehicles, excluding vehicle rateable under section C1 and C4C zone. For other commercial vehicles, there are 3 zones. Zone A consists of 4 metros, Delhi, Mumbai, Chennai, and Kolkata. Zone B consists of all states capital, and zone C consists of rest of India. So this is the geographical bifurcation. Period of insurance is there. Policies are issued mostly for 12 months. Permitted for extension of short period policy, right? For package policy, TP policy is not issued on short period basis. And if annual policy is there, insured request for extension of the policy to coincide with other policies. So we may extend the same period annual policy by charging pro rata additional premium. Warranty to recover extension premium of SP basis. If the insured has to give declaration that on completion, on expiry of this extended policy, he will be renewing the policy with us. Otherwise, we will be charging the difference premium for between pro rata and short period for the extended period. Premium rates are there for short period basis. This is not required to be left because short period rates are different for all companies. Premium is to be displayed in the policy, package policy in OD and liability, two sections are there. So premium should be shown, all add-on premium should be shown, details of add-on should be mentioned, and premium against the add-on should be also mentioned. It is the requirement of the IRDA. We will show you. Premium is calculated, discounts are given, loadings are given, but D-tariff discount is not shown on the face of the policy. Other discounts, applicable discounts, and loadings are given. Premium is charged in full. You need not learn this GR numbers. You should have some broad idea about the, suppose payment of premium is there. You should know how premium is paid. You need not learn what is a GR number for that. It is not possible. So premium as per 64BB compliance, premium is charged in full at the commencement of the policy. Installment facility is not there. So minimum premium is there for 100 rupees per vehicle. And for specially designed vehicles or mentally challenged or handicapped people, it is 25 only. So transfer of vehicle. In case of transfer of ownership, third party liability section is automatically transferred. There is no need to get it transferred in favor of the buyer of the vehicle. But he may come to the office and get it transferred. He should get it transferred. As per section 157, it is deemed transferred in respect of liability section. And for OD portion, he need to apply within 14 days with the insurer. So this is the time limit given by the Act after the ownership transfer, within which he can get the vehicle transferred in our office. Underwriting norms and guidelines are there. Up to 14 days, generally we do not get the vehicle inspected, and transfer fee is collected, and transfer endorsement is given, changing the ownership along with the certificate of insurance. In case there is delay more than 14 days, as per our underwriting guidelines, we are getting the vehicle inspected. So fresh proposal form is required from the transferee. Sale proof we take form 2930 and application made in the RTO office, received, etc. And transfer fee of ₹50 and plus GST is charged. Old certificate or policy is required to be surrendered to the insurer, and NCB is recovered for the balance period of the policy. Suppose policy is for 1 year, it has run 8 months, 4 months are left. So whatever NCB is given, we will be recovering 4 months pro rata NCB from the transferee. Then because NCB goes with the insured, so it will go with the earlier insured, and the new person coming in the contract has to pay the NCB for the unexpired period of the policy. So change of vehicle is also allowed in motor insurance. Substitution of the vehicle of the same class should be there if you want to substitute. For example, private car Honda is to be substituted with the Volkswagen car, it is allowed. But a commercial car is not allowed for private car. Two-wheeler is not allowed for truck. So class of vehicle should be same. Owner should be same. It should be allowed. Premium adjustment is done on a pro rata basis based on the IDV of the vehicle, cubic capacity, or GVW or cubic, whatever the underwriting factors are there. If additional premium is charged for the substituted vehicle, that has to be charged. And it should be ensured that proof of liability cover should be there for the outgoing vehicle. Without third party liability, we cannot substitute the vehicle. The outgoing vehicle should be either insured separately with us or through any other company, but liability cover should be there. GR 1920-21 take care of this insurable interest, as I told you. Vehicles subject to hire purchase, lease, agreement, whatever is there, financier is giving, so its interest is incorporated in the policy by way of agreed bank clause. And in case of total loss, the claim is paid to the financier. Partial losses or claims are settled in favor of insured. Cover note, earlier we were issuing cover notes, but nowadays cover notes are not issued. as per Form 52, Rule number 142/1 of Central Motor Vehicle Rules 1989, specified format is there in which coverage is there. So cover note has to be issued in the standardized form. Validity of the cover note was 15 days earlier. It was to be extended up to 60 days. But practically, if no policy is followed, the cover note is there. So coverage for entire policy is deemed to be there, but premium should be charged. Insurer shall issue a policy following issue of the cover note within 15 days. It is a duty. Since now we are issuing policies through digital mode, cover notes have been outdated, and most of the companies have stopped issuing the cover notes. There have been fraudulent activities also earlier, so cover note has been abandoned. Likewise, certificate of insurance is there. It is required to be issued in along with all motor policies as per Motor Vehicle Rules 1989 in the form number 51 of rule number 141. So specified format is there. We will see policy as well as this certificate of insurance practically. Cancellation of policy. So with the introduction of Master Circular on general insurance product from 1st April 2024, cancellation clause is there, but it is totally changed. But from exam point of view, someone asks you about the cancellation clause in GR 24 of this India motor tariff. So you should know what is the provision. I will tell you what is the current provision as per master tariff, master circular. So insurer or insured both can cancel the policy as per motor tariff by giving 7 days notice to each other. If the insured is cancelling the policy requesting, then we shall be retaining the premium for the policy which period which it has run on short period basis, right? And if the insurer is cancelling the policy, we will be refunding the pro rata premium for the unexpired period of the policy. So this is the main difference. Short period rates are different for each insurer, and these are given in the policy terms and condition when we are issuing the policy. Insured is to be informed. So cancellation is there. Surrender of the original certificate from the insured should be collected, and proof of liability statutory cover is there. You see, liability policies are covering third party risk. So this is a statutory requirement as per section 146 of Motor Vehicle Act 1988. No vehicle can use public place unless it is covered against third party risk. So while cancelling the policy, we have to ensure that statutory third party cover remains there, or we charge the premium for that. We may issue separate policy for third party, or the insured may produce separate policy from any other company showing us the proof, right? Or we can cancel the policy on short period or pro rata basis after retaining the third party premium. So these all options are there. Any of the options can be exercised. Cancellation is also there due to double insurance. Sometimes vehicle is insured twice, risk is same, period is same. So two policies are there. We have to cancel one policy. The principle is that the later policy has to be cancelled. Suppose there are two policies issued by the same insurer. So the later policy will be issued and be cancelled, and the full premium will be refunded. Suppose two different insurers are there, then the policy commencing later has to be cancelled and pro rata refund is given. Or there is a requirement from bank that earlier policy has to be cancelled. Sometimes vehicle is purchased with the loan from any bank. Suppose there is an issue, loan is not sanctioned, or the earlier policy which is issued has to be cancelled to protect the interest of the banker. We can cancel the same, but premium will be retained for the period the policy has run on short period basis. In all the cases, it has to be seen that minimum premium has to be collected. Minimum premium has to be retained by the insurer. That is, I have told you, 100 rupees plus GST. And no refund shall be made in case there is a claim in either of the policy. Two policies are running simultaneously. One is under cancellation we have to ensure that in none of the policy claim has resulted in. So cancellation and issue of fresh certificate of insurance. If any certificate of insurance is lost, mutilated, destroyed, or requirement of issue of certificate, we can issue the same by charging additional fees. We charge 50 rupees generally for issuance of this certificate. Likewise, cover note, as I have told you, it is now not available these days. But if it is required to be issued, then we can issue by charging duplicate fees for rupees 50. So GR27 is most important. It is no claim bonus. So no claim bonus is given to reward the insured for applying the vehicle carefully and not making any own damage claim. It is not concerned with any liability claim. You remember it. If during the currency of the policy for the 365 days, there is no own damage claim preferred by the insured, so he is rewarded by way of no claim bonus discount at the time of renewal of the policy, right? So slabs are there. For the first year, it is 20%. First year, there is no claim. The second year is coming for renewal. 20% will be allowed. Again, there is no claim. Then how much will be allowed? 25%. Then 35, 45, and 50, year by year. There should, if during the currency of any policy, there is a claim, then it will come to zero. It will not be reduced by one slab. Suppose the insured was earning NCB of 45%, right? There is a claim in this policy. In next year, he will not be entitled for 35. He will be put in zero only. He will be in the zero position. Remember, this is the current NCB allowed in the policy. So NCB is allowed provided there is a continuous renewal or break in the policy is not more than 90 days. Remember it. NCB is earned on the OD portion of the policy. So because liability is not in any way connected with this NCB, so the claim is not affecting entitlement of NCB, and it is therefore allowed in OD section of the policy. No NCB on motor trade policy is allowed. As I have told you, motor trade policies are there. Motor road risk, motor transit risk, and motor internal risk policies. Section 4E, F, G. These are not subject to NCB. No NCB on policies which cover only fire and theft risk only. If policy is covering only fire and theft, we don't allow NCB. So from exam point of view, it is very important. You should remember where NCB is allowed and where it is not allowed. For covering fire and or theft plus liability, NCB will be applicable on fire and or theft portion of the policy, because fire and theft premium will be accounted under OD section of the policy. Therefore, only that section is entitled for no claim bonus. NCB entitlement, renewal of policy after 12 months, no claim made within 365 days, right? Slabs are there. I have already told you. Sunset clause used to be earlier to protect more percentage of NCB, since it is now outdated, not required. Earlier, when this tariff was launched, so there was different percentage of NCB for commercial vehicle and two-wheelers or private cars. Commercial vehicle two-wheeler, it happened to be most maximum 55%, and for private car, it happened to be 65%. Suppose insured was earning and he is protecting the same till today, so it will be protected by sunset clause. It will remain. But if there is a claim under the policy, then again, it will be as per our new slabs which are given above: 20, 25, 35, 45, 50. He will have to earn the same again. NCB is allowed after all the loadings and discounts given in the policy, including laid up. So NCB is given in at the last in OD premium. You have to remember it. NCB follows the fortune of the insured. Therefore, if the vehicle is sold, we recover the NCB from the owner or buyer of the vehicle for the balance period. And the earlier owner can have NCB certificate which can be utilized by him on his other vehicle, new vehicle, or even existing vehicle of the same class. But it should be in the same name. It has to be on the same class only. So he can take it, and up to 3 years NCB certificate is there, he can claim it. NCB on transfer of ownership, I already told you. NCB on substituted vehicle. If vehicle is to be substituted, NCB substitution is also allowed on the other vehicle. We will insure the outgoing vehicle, as I told you, without NCB, and the NCB in the rear vehicle can be substituted for new vehicle. Or in the same policy, you can also do. In case of death of the insured, the legal year is transferred to the policy. The benefit under the policies are transferred. NCB is not recovered in this case. This is legal transfer of the policy. So NCB of the earlier insured who has died goes with the legal year. This is an exception to what we have told you, that NCB goes with the insured only. But in case of death of the insured, the NCB goes with the legal year and it is not recovered. NCB on a vehicle owned by an institution. If an institution is owning the vehicle and given to the employee for use, that can also be transferred in the name of the employee. If the institution says that vehicle is to be transferred in the name of employee and including NCB, so whatever NCB was there in the policy can be transferred to that employee. For example, United India has given us vehicle for 5 years. We are under scheme, conveyance scheme, and after 6 years, when vehicle is transferred in our favor, so whatever NCB was there, so after getting confirmation or consent of the United India Insurance Company, the same can be transferred to us when the vehicle is transferred in our name. And in case of transfer of insurance from one insurer to another, the transferee insurer may also allow the eligible NCB on when the vehicle is insured from one insurer in 1 year, and second year he is going for another, choosing another company, his NCB is protected. The other insurer, later insurer, will also allow NCB provided there is no OD claim given in the preferred in the previous policy for 365 days. So the insured will be bringing the renewal notice from the previous company that is entitled to NCB. If he is not having the renewal notice, he may give the declaration that he has not claimed any NCB. He has not claimed any claim, OD claim under the previous policy. So he should be allowed no claim bonus on renewal. But if at the time of claim it is found that he has taken NCB wrongly, so it was to be repudiated. All the benefits under section 1 of the policy for own damage will be forfeited. So this is the declaration given by the insured in case he has not brought with him renewal notice from the previous company confirming the NCB. In the absence of any, this declaration is there. This is the declaration wording which I have told you. You can see, and the new insurer has to send a mail or letter to the previous insurer within 21 days asking for confirmation of NCB, and the previous insurer has to confirm NCB in the vehicle within 30 days of the receipt of the letter from the new insurer. It is the requirement as per motor tariff. Failure to comply with the same will amount to breach of the tariff. However, nowadays we can verify the NCB on IIB site very easily. And earlier there was a system of sending registered letters or plain letters to the insurers. They used to come or not to come. But nowadays mail facility is there. We can send mail also. IIB is there for checking the claim history and previous insurance history of the vehicle. In case of sale of the vehicle, the insured may retain the NCB certificate and utilize the same for within 3 years, as I told you. NCB earned abroad, insured is entitled to avail such NCB in India, provided it is taken within 3 years of expiry of overseas insurance to above provisions of NCB. So there may be some percentage change in the NCB slabs in foreign country or in India, but whatever slab is there as per year, we can allow. NCB on renewal is protected up to 90 days of expiry of the policy. It means the insured has to get the policy renewed within 90 days, otherwise NCB will be lost. In case of death of an individual insured, NCB entitlement to the original insured will pass on to his legal heirs, to whom the custody of the vehicle passes. So NCB will be given to the legal heir. It is available. NCB earned abroad can be allowed within 3 years. I have already told. And NCB only vehicle insured continuously. It has to be seen that there is no break in insurance coverage. For 365 days, the vehicle should run in the name of the insured. In case of mid-term transfer in a policy, for example, 8 months policy has run and 4 months left. We have transferred the vehicle through transfer endorsement. And after 4 months, that transfer is coming to renew his policy. So we will not allow NCB on renewal policy because last year the policy has not run in his name for 365 days. For during this year, if the policy runs for 365 days, from next year onward, he will be entitled to NCB. So discount is also there for Automobile Association membership discount. It is given on OD portion of the policy. It is 5% on the OD premium, maximum 200 for private car, 50 rupees for two-wheeler. Valid membership has to be shown by the insured. There are automobile association which are certified like Eastern India, Uttar Pradesh, Western India, Southern India, Upper India. From any of the association, he may be the member. If he provides the proof, we can allow automobile association membership discount. It is given because he is member of these associations and some safeguards are there. Safety features are to be ensured by these associations. So he is encouraged by way of giving this discount. So discount for one membership is allowed. If he is member of more than one, only one discount is allowed. And no discount on fire and or theft risk is allowed because liability section is not there. So this is not allowed. Although it is not allowed with liability section. It is applicable on new vehicle and renewal vehicle both. Pro rata collection of for membership in currency of the policy. For example, earlier when the policy was renewed, he was not member of the association. He became member mid-term. So we will allow discount on mid-term basis. Likewise, if he is leaving the association, then pro rata recovery of the same will be done. Discount for vintage car, I have told you, OD premium 25%. Discount is there and TP premium is 50%. And pro rata for mid-term. For mid-term certification, 50 pro rata basis is there. Discount for anti-theft device. If anti-theft devices are installed in the vehicle, there are chances of more safety. So insured is encouraged to be provided with discount. On OD premium, we provide 2.5% discount, maximum 500. Anti-theft device have to be approved by Automobile Association Research of India, Pune. Certificate has to be produced by the insured. And motor trade policies are again not permitted for anti-theft device. Mid-term installation is there than anti-theft device. Pro rata charging of additional premium for unexpired period of insurance is done. It means mid-term anti-theft device is installed. We will provide discount. Just hold on. Hello. Yes. I am in a meeting. So concession for laid up. Can anybody tell? You can unmute your mic. Hello. Am I audible?
Yes.
Yes, sir.
Yeah, you can
Sir.
unmute your mic so that somewhat it is interactive. You have gone through all the major portion of this tariff. So all the broad guidelines I have tried to tell you. So I want that some interaction should be there from your side. Now you can anybody tell what is the laid up and why
Sir,
concession is given?
hello. Yes,
Yeah,
sir. When the vehicle is not on road, means it मतलब सर वो खड़ी है कहीं पर गाड़ी, तो उसको यूज
हाँ,
नहीं कर रहे हैं आप, तो अपन आरटीओ
yes,
सर्टिफिकेट जितने जितने मंथ के लिए वो लेड अप करना चाहता है, वो आरटीओ सर्टिफिकेट ले आता है, उतने मंथ के लिए अपन उसको लेड अप कर सकते हैं, इससे उसकी जो पॉलिसी वो आगे के एक्सटेंड हो जाती है उसका पीरियड।
right, very good. So laid up is the time during which the vehicle is not coming on road. Like the period of COVID, you have seen mostly vehicles were stranded, not allowed to come on the road. So vehicle risk will be limited. So insured will be asking for refund in the discount in the premium. So we allow vehicle laid up concession. Vehicle laid up in garage and not in use for less than 2 months, consecutive months. At least for 2 months, it has to be laid up, right? So we will be providing discount to the insured for the period the vehicle was in laid up condition. During the laid up period, it is not what going on road, so risk is reduced for third party risk, but risk is there for fire and theft. So premium for fire and theft is charged and the balance is adjusted. So there is different treatment for liability or package policy. You please remember, no cash refund is allowed for this discount. This is either policy on renewal is extended by the same period, or the renewal premium of the next policy will be adjusted after laid up discount and NCB in the previous policy. So this has to be kept in mind. Pro rata return of premium for laid up period is allowed, provided the laid up period is more than 2 months. Insured has to declare. There are situations when the insured comes and tells that my vehicle will be laid up. He gives an intimation to the company and no discount or refund is there. It is just an intimation. He is not aware whether it will be laid up for 2 months, 3 months, 4 months. And after when the vehicle is coming out of laid up period, it is going on road, he will come to us. We will see if it has crossed, for example, 4 months vehicle was laid up. So we will be charging fire and theft premium for 4 months on pro rata basis. And the endorsement is issued. On renewal of the policy, we will be extending that policy, the renewal policy, by 4 months. Or there may be situation the insured is coming to us and declaring in advance that vehicle will be laid up for 3 months. For example, 3 months. More than 2 months should be there at a stretch, not in piecemeal. Also remember, for example, he is coming to us for 15 days or 5 days, again the vehicle is on road, then again coming after 5 days, that 7 days it will not be accumulated like this. So at a stretch there should be laid up period for 2 months or more. So in the second situation, he is coming to us and asking that his vehicle will be laid up for 3 months. So we will be charging premium for 3 months fire and theft premium on pro rata basis and issuing the laid up endorsement. Next period, the policy will be extended for 3 months, or the renewal premium will be adjusted by the period by this discount. So pro rata return of premium for laid up is there, credited to the insured on renewal premium for suspension during this period. Next renewal premium will be reduced. I have told you, no cash refund is allowed. It is only adjusted over the period of insurance of the current policy extended by this same period. Or expiry date is extended. I have told you, or the current policy, either you can extend the expiry date, or in renewal policy, you can reduce the renewal premium by this discount. The option lies with the insured only. And for exercising this option, the insured is required to pay administrative charge of 15 rupees. Right? So in liability policy, there is no OD cover, so no premium is charged for or adjusted for fire and theft. Right? It is only for simple liability policy. In liability policy, we will not be charging premium for fire and theft. It will be either extended for that period, or renewal premium of the renewed policy will be adjusted for this period of suspension. In package policy, since OD cover is there, and vehicle is laid up in garage. So risk of fire and theft is there. So we have to adjust the laid up concession premium after retaining fire and theft premium. So this is the main difference of treatment. So liability is restricted to fire and theft risk during the period vehicle is laid up. Option is lies with the insured, that is whether he wants to extend the policy, current policy for the period of laid up or get the discount in renewal premium on renewal period. So pro rata return of premium is credited, right, for fire and theft risk, and the credited premium is reduced in next renewal premium. I told you. No cash refund is given to the cash refund means no check or NEFT, whatever. No simple cash. Refund of premium is not allowed. It is either adjusted in renewal premium or current policy period is extended. The return premium is calculated on net premium on the date of issue of the policy or on renewal of the policy preceding the laying of the vehicle. So the next period of next renewal premium will be worked out, and after working of that premium, discount for this laid up will be adjusted, or expiry date of the current policy period can be extended by the period of layup suspension. So option is the insured. As I told you, same rule is there. It is not applicable when the vehicle is undergoing repair. For example, if vehicle is under repair, he cannot come to us and ask that we should be given laid up discount. A previous notice has to be given to the insurer, and certificate of insurance has to be surrendered to the insurer. We ask the insured to submit certificate of fitness to the RTO and get it suspended for that period, so that vehicle should not come on road. As a proof that fitness is surrendered, suspended, so vehicle should be laid up. Then RTO issues the certificate that fitness surrendered. This is the certificate. Based on that certificate and intimation by the insured, we allow this concession. Total laid up premium discount or adjustment shall not be more than 12 months. This is very important. And no premium return for layup for trailers or vehicle used for hire on demand or for motor trade purpose is allowed. So I think it is clear to all of you.
Sir, one question is here. Is
Ah.
laid up held in insured own home or other than garage area?
Hello, pardon, sir.
Is insured laid up his vehicle in his own premises or other than garage area?
It is not necessary that it should be in his own garage only. The matter is that vehicle should not come on road. It is to be laid up. Once it is laid up, thereafter we will say that it is not coming on road, so it is limited to a place only. So prohibition of midterm inclusion or cancellation of extra benefit, not permitted more than once. But nowadays tariff is not there, so different insurer will be charging different terms.
May I interrupt, sir?
Yeah.
Sir, can you just confirm vintage car discount on OD and TP? Somewhere it is written 50% both on OD TP, somewhere it is written 25 and 50.
OD premium 25%, madam. On TP premium it is 50%. I tell you.
Okay.
Yeah.
That is
I confirm
25
you.
on OD and 50 is
25 on OD and 50 on this. I will show you TP circular also.
Okay.
Or premium.
Okay.
Where in vintage car 50% discount is there.
Okay.
After this presentation, we will show you.
Okay, thank you, sir. And 25 is on OD.
OD, yeah.
Okay, thank you, sir.
But again, when the rates are not there now, when rates are not there, anybody can charge anything.
Finally,
keep
it
it in
depends
mind.
upon the company to depend on particular
yes.
insurance.
So far as TP is concerned, it is regulated by IRDA.
It is regulated.
So whatever is there in IRDA, because it is decided by Ministry of Road Transport and Highway Authority of India in consultation with IRDA. So whatever rates and discounts are there, they have to be applicable across India for all the insurers. So I will show you the circular that is there. But for OD portion, it is mentioned 25% in tariff. But nowadays, is any insurer can allow anything.
Okay, sir. Thank you, sir.
Yeah.
सर ये व्हीकल लेडअप ये मतलब कमर्शियल और प्राइवेट कार दोनों के लिए एप्लीकेबल है?
Yes, yes. It is not limited to commercial or any vehicle.
Okay.
So discount concession,
Sir,
especially.
Sir,
हाँ,
vehicle lead-up is not applicable for Class D vehicles, no?
yes, Class D vehicle is not applied.
Okay.
I have told you.
All sir motor trade, na sir, all DEF, everything it will not apply.
Yes, yes, no trade.
All DEFG, everything it will not apply.
Yes, yes.
Okay. And trailers and vehicle for higher reward means taxi and rickshaw.
Yes, ma'am.
Okay.
Please
Sir,
hold on.
Class
I
D
can again
is not
confirm.
mentioned
Sir,
in
what
lead-up.
about the goods carrying vehicle? Is a ladder is
Goods
applicable?
carrying, it is not applicable. Whatever you said.
Class D is not, I don't think it is applicable for lead-up.
Hello,
Yes.
any vehicle which is on commercial basis, hire and reward, it is not applicable. Means indirectly they want to say it's applicable only for private car and two-wheeler when you are using for personal purpose. No need to explain whether they are applicable for goods carrying, passenger carrying. EFG is a totally different. We should not consider. Most of the GRs are applicable only for private car and two-wheeler, which is basically private use unless specifically mentioned. Otherwise, EFG is out of scope from every GR. That you
Yes.
should keep in mind while answering all the questions. While answering all the questions in GR.
It is
you can
applicable to
ex-
goods carrying vehicle also.
Yeah, that is only when the government suspend during the COVID times or
Yes.
something and when the permit.
Yes, yes.
Otherwise, it won't
Yes, yes.
applicable. So
Yes,
everybody
yes.
who is
Yeah,
appearing
yeah.
for the
I'm-
exam, it should be very clear on the mind. Whenever there is a discount or something, it is mostly applicable to the private car, two-wheeler, and this one, four-wheeler, private car. Otherwise, if specifically mentioned, then only. But for commercial vehicles, maximum discounts and EFG is totally out of the scope from the GR for the discounts and all. So
Yeah, I
this
am again,
basic
I am
underline
clarifying.
everybody should remember.
Yeah, ma'am, I am clarifying. There is it is mentioned in tariff. No return of premium or extension of policy period in lieu thereof is to be allowed for layup trailers and or vehicles used for hire and reward or motor trade purpose, right? Except when the permit for vehicles are temporarily withheld or suspended by the government of India.
Yes, yes.
So trade certificates
Yes.
are not there, trailers are, but certificate in commercial vehicle, as you are telling that GCV. So we were allowing mostly in COVID times, there was a
Yeah.
requirement from the GCVs because they were out of the road.
Yeah,
And
that's what
PCVs
saying.
also, buses also, they were not plying
Hmm.
on the road. So they asked that it is to be.
Hmm.
It
Sir,
is to
that
be.
is once in so many years. Otherwise, nobody
Yes.
will. Even our experience shows no, it is not allowed.
During this
So
COVID period, it was a peculiar experience because
Yeah.
during this, you see, there are circulars from RTOs, and that all the fitness certificates are cancelled for this period. It means they are cancelled, so they are suspended. They were entitled. So
Yes.
those insured wrote to us, mostly fleet owners, because they were affected. Their livelihood was affected. There was no work.
But sir,
So-
sir, for exam purpose, this question is asked whether the layup is applicable for goods carrying vehicle.
Yes,
What
it is
will be the
applicable.
answer?
Applicable, sir.
But subject to the certificate issued by the government of India, na? That is not mentioned in the question. Then why?
No, certificate, for example, in today's time, suppose a vehicle is laid up, right? He is not using the same for any purpose. He is keeping the vehicle in his garage or in his house. Okay, goods carrying vehicle is there for 4 months. So he will surrender the fitness certificate to the RTO. RTO will issue the certificate that vehicle is fitness is cancelled for this period. He will intimate us and then we will allow this. No issue.
Okay.
As I told you, the treatment will be as per liability or package policy, whatever is. But fitness has to be cancelled and he has to surrender us the certificate of insurance. After 4 months, suppose he is bringing the vehicle on road, he will have to apply to the RTO, get the vehicle inspected, and we will issue the endorsement in the policy.
But you mean to say in private car and two-wheeler with the fitness or any type of certificate is not required for the layer
Fitness
before?
is not required. No, RC is
Not
automatically
required.
fitness.
Then only mere the declaration by the insured that I am not using the vehicle and on road, then you may lay up the
We
vehicle.
should
In
take
case of private car.
mere taking declaration from the insured is not sufficient. We should take RTO's cancellation. So a private
In
car is
case of
there. He is
private car
coming to
also.
us. He should intimate
Yes.
the RTO, and RTO should cancel the or suspend the RC for that period. Otherwise, there will
Okay.
be problems in claims. We are seeing a
Yes,
number of
yes,
grievances or
yes.
claims are there. We will ask him to surrender the RC in case of private vehicle or in case of commercial vehicle fitness with the RTO. Get the certificate.
Means in all cases. Means in all cases,
Yes.
whether be it is commercial, be it is private, the
Yes.
certificate or RC cancellation should be is
Suspension.
required from RTO. Yes, suspension.
Because
Okay.
we are already having 2-3 cases in which this type of anomalies are there. The insured has declared and later it brought to the road and there was major accident or fire, even total loss. So that that claim was repudiated and now it is under consumer forum. He told that this was due to during COVID period also. So insureds are not properly aware, and our even most of our office people are also not aware of the provisions. So it should be clear. Proper knowledge is required. Right now, prohibition of midterm debate. I have told you extra benefit concession, for especially at this discount is also there. Discount for motor OD premium for specially designed vehicle, 50% of OD premium, and endorsement must be there in RC for specially designed people. Registration or use of the vehicle, for example, in motor insurance, we are issuing policies in the name of user. For example, I have taken loan from SBI for 5 lakhs and going for insurance. RC will be issued in favor of me only, and name of SBI will be written as hypothecation. Policy will be issued in the name of my name only, right? And policy will be containing the hypothecation clause by way of agreed bank clause, as I told you. But there are sometimes the vehicle is under temporary registration and the final name of the insured is not decided. So under temporary substitution or motor trade risk, we are generally issuing the policy in the name of dealer, because no RC is issued. They are taking temporary RC to take the vehicle from one place to another. Then some work is to be done or it will be sold later to the insured. But during that period, temporary RC is there, then we can issue the policy in the name of dealer or manufacturer. Otherwise, it has to be in the name of registered owner only. Or as I told you, in case of GR 19, 20 or 21, where financial interest of any bank or financier is there, it has to be incorporated in the policy and interest of the financier is saved. But name of the insured will be definitely user. You keep it in mind. Earlier, there were some wrong practices or lack of knowledge. Due to lack of knowledge, people were issuing policies SBI account of name of the insured or in the name of SBI. They are not mentioning the name of the insured. So now it is very much clear by this tariff that policy should be issued in the name of the user or registered owner of the vehicle, and it is not permitted to issue in vehicle insurance for use for a purpose other than that permitted by. So whatever permission is there, for example, vehicle private car is there, it is registered as private car. So we have to issue policy in private car pack format only, not a passenger carrying vehicle. So RC is a very important document. It gives us the permission for the purpose vehicle is registered with the RT. Then use of vehicle within the insured premises is there, then the discount can be given. It is very simple. Use of is confined to the premises and vehicle not licensed for general use. So we give discount for 33 by 1/3%. And no certificate of insurance is required because it is not going on public place. Certificate of insurance as per Motor Vehicle Act 1988, Section 146 is required. For 147, it is required to be issued for all the policies since they are using public place. Because they are confined, so certificate of insurance is not. Otherwise, it is only for there is no such difference in both the same. Both are same from the discount point of view. CPA cover is very important. Anybody can tell? You can unmute. What is CPA cover?
covered to owner driver.
Policy given to the owner of the vehicle.
हाँ जी, PA cover.
For the owner of the vehicle, registered owner of the vehicle.
Owner driver. Owner driver.
Owner and driver, I think owner driver. The driver.
Owner driver. Owner driver.
Any other, sir?
With
When
valid
the
driving
owner is
license, sir.
driving, he is covered.
Sir,
Owner
is it
driver with
registered?
valid driving license.
Sir, is it registered owner or the
Registered
person
owner holding
Not
the
the
valid
paid driver.
license to drive the class of vehicle.
Yeah, or whether the person who is like helping him out or like driving with as co-driver, he is also covered.
Very good question.
Registered owner driving the vehicle at the time of accident.
And whether the co-driver is also covered or not.
Co-driver, no. Co-driver is not the owner, no. It has to be owner
No,
come driver.
no.
If
Okay.
he's in the same vehicle as co-driver, then he's also covered.
Yeah, whether he's covered or not, that is the question. Whether obviously if he's driving, then he is in the same vehicle. So
Sir, he
whether
should
he is
be,
covered or not.
sir,
No,
he should
in
be having
owner,
the valid
owner
driving license,
driver
sir.
laws, he should not be covered.
Sir, he should be
Because
having
he's
the
not the
valid.
owner of the vehicle, no?
Yes, sir.
He should be having the valid driving license at the time of accident, and the RC
Okay.
should be in the name of the insured.
Okay.
Very
He
good.
may be
Okay.
driving or may not be driving. He may be accompanying also. It is also covered, sir.
Okay. Thank you.
Very good. So thank you all. It's very good to hear that most of the participants are having good knowledge, and with your interaction, I got a very good idea to what level you are understanding the concept, and it is very helpful for me to make you understand. Now I tell you what is CPA cover, compulsory PA cover. So with the motor vehicle, this India motor tariff, there was a new addition 36GR, that compulsory PA cover is to be given to the registered owner of the vehicle and who is individual also. Suppose a company name is there, policy we are issuing. So we will not be issuing because there is no death of the company. So individual owner is there, registered owner is there. So compulsory PA cover has to be given, right? Earlier it has to be for rupees 2 lakhs. For 2 lakhs. Now there is a change in this amount. There is a very well-known case, United India versus R. Rekha. With this, the capital sum insured has been risen from 2 lakhs to 15 lakhs. In case of accidental death of the insured, 100% is paid, means 15 lakhs is paid. Permanent total disability also 100% is paid. For loss of 2 limbs, 50 and 50, 100% is paid. For loss of 1 limb, 50% is paid. If there is a fracture, for example, he gets hurt in accident and fracture is there, nothing is paid, right? So I'm giving you all the scenarios which have been asked in the exam, and this is very important. You should have broad idea and you should have clear idea. Otherwise, there will be tricky question and we will not be able to answer. So CPA cover is important. It is compulsory. First thing, coverage is 15 lakhs. Now the IRD has also asked insurer may bring about more cover, but there should be minimum cover of 15 lakhs. It can be more also. And it is not applicable for 4EFG section. Trade policies, it is not applicable because in trade policies are issued in the name of, as I told you, dealers or manufacturers. There is no registered owner till that time, right? So it is applicable for both liability and package policy. Whether you are taking liability policy or package policy, it is compulsory that you have to take compulsory PA risk in the policy. For this, the insured has to be the registered owner of the vehicle. In RC, he is the registered owner. Number 2, he is having effective license. Can anybody tell me what is effective license? Effective DL?
It should be valid at the time of accident and having a license to drive the class of vehicle.
Very good. Any other?
Valid license means it disqualified.
He should not be disqualified from obtaining a license.
Yeah, very good. Very good idea. So he should have effective driving license, registered owner of the vehicle, and he should have he or she should have effective valid license at the time of accident. So
Apart of that, he should
please,
be.
yeah. During interaction, we can unmute the phones, and when I am speaking, you can mute the phone. Yeah. If you are telling, then you can tell. Yeah. Anybody wants to add?
सर यदि मान लो सर वो दो व्हीकल का रजिस्टर्ड ओनर है प्राइवेट कार में
Yeah, I am coming to that point. Please hold on.
जी जी
I have just given some introduction, then I am coming. This is a big topic. Until now, whatever we have discussed, if there is any doubt, you can ask me.
Sir,
Not. Sir, if I may interrupt,
kindly.
Can we have a break for 10 minutes? Then
Yeah,
this
yeah,
is
yeah.
a very big topic. We'll come back and discuss.
After 10 minutes, we will join again.
Yeah. Please.
I think the topic is interesting to you, or
Yeah.
because mostly officers are taking this motor subject and aware of this subject, so they will be enjoying this, and we will be covering other things also. So we shall meet after 10 minutes, right?
Thank you, sir.
Thank you. Let's break.
What is the premium for this extension?
Yeah, after 10 minutes, madam, we will join back.
Yeah. Okay.
Good morning. Hello.
Yes, sir.
Yes, sir.
Good morning.
Yes, sir. Yes, sir.
Good morning.
We can
Can we
start,
resume
sir.
now?
We can start, sir.
Yeah.
Yes, sir. Yes, sir.
Sir, I
Hope you
have
have
a
understood.
question.
Hope you have understood whatever we have discussed since morning, right?
I had
Now,
one question, sir. Can I ask?
yeah.
Yeah, is there any difference between having effective driving license and he should be disqualified from should not be disqualified from holding such license?
It is if he is disqualified, then it is not effective. For example, a person was giving a driving license. It was valid for 20 years, right? Then during after 2-3 years, he met with an accident. His leg is cut, so he was disqualified. So in that way, if he is disqualified, then driving license will not be effective. Although it was earlier issued for 20 years, but due to this eventuality, he is not able to drive, so that effectiveness will go away. So this is written in this interpretation only. It may be effective for initially, but during the currency of this period, there may be some chances. Suppose some person has lost his eyes. He is not able to drive, but he is having driving license. He is driving, so he should be disqualified. If he is disqualified, then his driving license will not be effective, although it is valid. Although it is valid for 20 years. So this is the difference only. This is just an extension to this the word effective. Effective should be in terms of both valid and as well as to drive the particular class of vehicle. And disqualified comes when the DL is issued, but due to this eventuality, it has to be disqualified, that person. That has to be debarred. I think you got the idea.
Thank you so much.
So now we are studying this CPA cover. It is very important for all class of officers. That's why I am reiterating emphasis on it. All will be getting question on this topic. Please hear carefully. And if you understand the concept very well, then you will be able to understand. Because in exam, some tricky way he is asking. He is not asking clearly. If you are having clear idea only, then you will be able to reply. So all will be getting and the required question from this, at least 1 or 2. If you pay attention, you will be earning 2 marks right now, right? So CPA cover is compulsory
Sir,
for
one
all the
question is
policy.
at the time of accident, driver is intoxicating in drugs and
I'm
liquor.
coming on that thing also. I will cover here.
Okay.
I'm covered. I will. Now you can mute your mic. Once I complete it, then you can discuss, right? So CPA cover is compulsory for all the policies or motor policies except EFG section, right? The insured must be individual and he must be having effective driving license. This is required for registered owner only. He is having effective license. Liability and package both it is required. It is not exempt under liability or package, both it is required. Coverage for owner driver is whilst he is driving the vehicle. Suppose he is sitting in the driving seat, he is registered owner, he is having driving license for this class of vehicle. He meets with an accident, he dies, coverage is there. Suppose he is mounting the vehicle or dismounting the vehicle or traveling as a co-driver, occupant of the vehicle, then he is also covered. Provided he must be registered owner of the vehicle and having effective driving license. Suppose a policy is issued in the name of Mr. Ram. He is not having driving license, right? He was driving the car. So there is no CPA cover for him. Or on the other hand, policy is issued in the name of, say, in the name of SEMA, right? The registered owner is SEMA. Premium is also charged for SEMA, but SEMA was driving, but she was not having effective license at the time of accident. She died in the accident. Even then, claim is not paid. So there are two twin conditions should be satisfied: registered owner of the vehicle and having effective license. So coverage is when he or she is driving the vehicle, mounting the vehicle, dismounting the vehicle, or traveling in the vehicle as a co-driver. In any case, he or she must be in connection with the vehicle. Suppose a person is going and in the market, he stops, parks the car, crosses the road, and while crossing the road, other vehicle hits and he dies. So CPA cover note will not be triggered because he is not in connection with the vehicle. So he must be in the connection with the vehicle. So for all scale 3 or 4 people should understand this difference. If he is not in connection with the vehicle, this cover will not trigger, right? So CPA cover cannot be granted where a vehicle is owned by a company because it is in the name of company. So it is the risk is covered is accidental death, PTD, or loss of limbs. This cannot happen to a company. Therefore, it will not be applicable to this institution. If insured has more than one vehicle, somebody was asking, suppose A is there, he is having Honda Amaze, Maruti car also, and a Volkswagen car also. Does he require to have CPA cover for all the three, or one cover will apply? Earlier in motor tariff 2002, it was permitted that if a person is having more than one vehicle, he can have CPA cover in any of the vehicle, it will be covered. But in 2003, there was amendment through to a TAC that he has to take CPA cover for all the vehicles in his name. Suppose he is having 3 cars, so he has to take 3 cars CPA cover. There may be chance that he is driving a Honda Amaze car and he dies in the accident, but coverage for CPA is taken for Maruti car. Since Maruti car was not in question when accident took place, so there will be no claim on Maruti car policy. So the coverage was not available. And IRDA later also reiterated that coverage for all the policies, for all the vehicles has to be taken for all the policies. It is not that one CPA cover is applicable for all the policies. So you might ask them, what is the remedy for it? Suppose a person is there, he is having scooter, he is having Honda Amaze, he is having Maruti car, or he is having even truck also. So he need not pay compulsory PA coverage premium for all the vehicles, because at a time only one vehicle he will be driving or sitting in the vehicle as a co-driver. It is right now. So the IRDA has suggested that we should come out with a standalone CPA cover policy. In 2020, we launched a separate policy. This is known as standalone CPA cover, or SA as standalone CPA. It means if a person is taking as standalone CPA policy, paying premium once, it is applicable for all class of vehicles. He need not pay premium for all the vehicles. So it is a better option for those persons who are having more than one vehicle. And it is applicable for all class of vehicle, whether it's a truck, scooter, car, commercial vehicle, no problem at all. Yeah, someone was asking what is a premium. So we are charging 275 rupees of premium for 15 lakhs of cover in United India. In Oriental, I think they are charging 325. Somewhere some people are charging 300. Some are charging 350. So premium range is between 250 to 350 or even 400. So you will not be asked what is the rate of premium. If in United India, I can tell you we are charging 275. And this premium is charged under liability section. So I'm telling you all the scenarios. And at the time of accident, the registered owner must be having effective license. He is in connection with the vehicle, driving the vehicle, or sitting with the in the vehicle as a co-driver, or mounting or dismounting, but he must be in the connection of the vehicle, right? Till now it is clear. So what is the coverage available? Coverage available is accidental death. In case of accidental death, under CPA policy, he will be getting 15 lakhs of coverage. It is a benefit section. It is not a indemnity section. So he will get 15 lakhs. It's legal here. So for issuing this, while issuing the policy or underwriting, nominee detail is very much required for this section. While underwriting, the system will ask the nominee name, age, relation, and it will also ask whether the insured is having effective license, yes or no. Suppose we are opting that he is asking to opt out for this cover. The system will ask whether he has license or not. If he is having license, he will have to take this cover. It is compulsory. It is as per the guidelines and directives of Honorable Supreme Court of India. But if he is declaring that he is registered owner of the vehicle, but he is not having the effective license, he has to give undertaking, Only in that case, CPA cover will not be applicable and no premium will be charged. Otherwise, we have to check. Or he comes to us, asks us that I am already having CPA cover of at least 15 lakhs. This is my PA policy. Suppose he is having PA policy for 20 lakhs. He shows us. No issue. We will enter the details of that policy in the system and we will not charge. He must be having PA cover for at least 15 lakhs. This is the guidelines and directives of the Honorable Supreme Court of India. Whether he is covered for this cover under our motor policy or separate standalone CPA policy or any personal accident policy under miscellaneous department. But details of those policies has to be entered in the system. You got the point? So accidental death case, 15 lakhs, 100% claim is there. PTD claim, permanent total disability is there, 100% is there. In case of loss of 2 limbs, 100% is there. In case of loss of 1 limb, 50% is there. You got the idea? So somebody was asking the exclusion under this. The exclusion under this is attempt to एक चाय मिलेगा intoxication of liquor and drug and attempt to suicide, both are exclusion under this section. If the person is attempting to suicide or is under intoxication of liquor and drug, it is proved, then no coverage under this section will be provided. I think I have covered all the scenarios in CPA cover. Now you can unmute and ask me for a minute if any doubt is there.
Excuse me, sir.
Yeah.
That means that DL should be effective even at the time of taking insurance as well as the time of the claim.
Actually, it should be effective at the time of accident.
But since we are asking for the DL details at the time of taking insurance, and if that time it is not valid, it is waiting for renewal. Then
suppose waiting for renewal, but he has applied for it now.
Yes.
But he has applied for it. The time limit is there. Nowadays, DL can be renewed 1 year in advance or 1 year later. So if he has applied and the DL validity is already over, but accident takes place, then at the time of accident, we will ask him to produce the DL. He will bring the DL, renewed DL from the RTO, which is having validity date of that date, which is covering that accident date. Then there is no issue, no.
And sir, second question, even as a co-driver, suppose he's sitting beside the driver, so he should have an effective driving license at the time of accident.
In all the eventualities, he has to have effective driving license at the time of accident, whether he is driving, whether he is going as a pillion rider, whether he is co-driving, whether he is sitting as a passenger.
Okay, sir. Thank you.
Passenger means not for hire and reward, just like going in a private car. His family friend is driving or his wife is driving. He's sitting in the car. His wife is driving. The vehicle is in the name of the insured. Suppose X is there. His vehicle is insured is the name, and his wife is driving the car. During the accident, Mr. X dies in the accident due to accident. So Mr. X will be getting 15 lakhs of premium, provided we will see he is a registered owner, he is the insured, and he is having effective driving license, and he was not under the intoxication of liquor or drug. Only 4 things. Then whatever documents you require, FIR, then postmortem, that is required for claim process.
Just to interrupt.
Got the idea?
Sir, just to interrupt.
Yes, sir.
So I have deliberately elaborated this topic because everybody will be getting questions. For the last 3 year times I am appearing for the exam, I am getting question on this.
So
and because of lack of clarity, most of the people do wrong answer, opt wrong answers.
Therefore, is there a difference between co-driver and co-passenger?
Passenger is a person who is going for hire and reward. Suppose in a bus, you are going and paying fare, you are passenger. Co-driver means you are going in a car. Suppose your wife is driving, you are sitting beside her in your private car vehicle. So you are co-driver. Sometimes passenger, we understand that
even if the occupant is in rear seat, that would be co-driver, right?
Yeah, co-driver. For this CPA cover, there is no difference whether he is driving the vehicle as a driver or sitting as a co-driver, sitting as an occupant. I have told you now, because the private car vehicle limitation has to use is that it is not used for hire and reward. His family friend, his family member may be driving the vehicle. The matter is that the person who is driving the vehicle, he is driving or she is driving with the consent of the insured. And so
Okay,
far
sir.
as this CPA cover is concerned, the insured, our registered owner, should be having effective driving license, sitting in the car as a co-driver, occupant, or he may be driving the vehicle, or he may be mounting or dismounting also. But he must be in connection with the vehicle at the time of accident to prove that he was in contact with the vehicle to claim under this benefit. I think it is clear
Sir,
for all
one
of you.
question is there. Insured has taken CPA cover for his all vehicles.
For
At the
all his
time of
vehicles.
accident, at the time of accident, for said vehicle, TP policy is not in force. In that scenario, CPA policy benefit 15 lakhs will be payable to insured.
CPA policy is there, but you are saying that TP policy is not there. How it is possible?
Insured has not
case
renewed
of
his TP
standalone, in
policy.
case of
Sir,
standalone is active,
in
TP
a
is not
Sir,
active.
standalone
insured
CPA,
has
sir.
standalone CPA policy.
He is having standalone CPA policy, but the vehicle he is driving, either its insurance has expired or he has not
Yes,
got it
sir.
insured. But
No, it has got expired, or it maybe got he's not having insurance. Now, what
it
is
is
the
not
scenario,
having
sir?
insurance.
He's only have a standalone CPA policy.
He is having standalone CPA policy. He was
Ah.
going with the vehicle, right?
Okay.
Because it is a benefit section, the coverage claim will be paid.
No need to any
Provided
condition with the
he is a
TP
registered
policy.
owner of that vehicle, and TP policy is not connected. TP policy is connected in case of SAOD. I will tell you later.
Sir, in
For
case of
SAOD.
commercial vehicles, in case of commercial vehicles, there's a number of fleets for buses
Yes.
and trucks, and owner doesn't drive the vehicle. They will hire the drivers. What is the case in commercial vehicles now?
He will give undertaking that I am not driving the vehicle. I am not having license. My driver will be driving. So we will exempt.
No, sir. He has license, but the owner of the fleet of buses doesn't drive the bus. Na? They hire the drivers, na, sir.
In that case, we will do that. We will issue one CPA policy for 275 only in his name. I am mentioned in all the policies.
Sir, the premium for CPA is 750, na, standard for all.
Earlier it was 750 we were charging. Later it was revised to 275. Now
Sir,
currently it is 270.
Sir, I have one question.
Yeah.
You are telling for all the if the owner is having 3 vehicles and he should have compulsory personal accident cover for all the 3 vehicles.
Yes, ma'am.
See the one of the this one he was asking if he is not having liability policy for one vehicle and that vehicle by mistake, while riding, he met with an accident. Whether CPA cover is payable or not?
CPA cover will be payable because it has no connection with the liability section. It is a benefit section.
Okay, then why it is required then for all the 3 has to take a CPA cover then?
It was the provision, na. He may be driving any A vehicle or B vehicle or C vehicle. Any of the vehicle may be in accident, na. Suppose he has taken coverage with A vehicle, and on the date of accident he was driving B vehicle.
Okay.
Right? In B vehicle
Where
there
he
was
has
no.
not taken, where he has not taken a insurance at all.
For vehicle he has not taken any insurance. Okay.
Yes.
But where he has taken, for A vehicle or B vehicle?
That's what. See, he has 3 vehicle, A, B, C, all the 3. I mean, actually, that's what. Yeah, A and C, he's having a CPA cover, and but he was driving. B also belongs to him, but B doesn't have a insurance cover. In case he met with an accident when he was riding a B vehicle, then what will be the coverage for CPA?
In B vehicle, CPA cover is not there, no?
So it doesn't come into
In B
picture. He
vehicle,
can't produce the A. He can't. I mean, now legal haze can't produce the A and C policy for claiming CPA.
No. I'm telling you. You are telling that there is scenario 3 vehicles are there A, B, C. He is having CPA cover for A or C, A and C,
Yes.
but he is not having vehicle B, right?
Yes.
And on the date of accident, he was driving vehicle B.
Yeah.
This is the question now. On B vehicle, there was no CPA cover. I told you it will not trigger, so no claim will be paid.
Oh. Okay.
I told you earlier that he must be in connection with the vehicle and the premium must be charged. The premium has not been charged, although he is in connection with this vehicle. That's why it was
at the time
required
of
that.
So at the time of the accident, he should have an insurance for that particular vehicle. Only then CPA cover will trigger.
Yeah. Or if he is not having CPA cover specific for that vehicle, he should have SAOD cover. So standalone CPA cover, sorry. If he is having standalone CPA cover, that we mentioned the policy number and detail in the policy, na? So at the time of claim, he will produce it and he will show that he was driving the vehicle. FIR is there. All the documents are proving that he has died while driving the vehicle. He was in connection with the vehicle. So our standalone CPA cover will trigger, na? We will pay the claim under that policy.
Claim.
Huh?
That will be a miscellaneous claim.
No, in CPA, standalone CPA policy is given in motor department.
Miscellaneous policy, na?
No, standalone CPA cover is a product which is given in motor department, madam. From 2020, it has come. Two new variants have come: standalone OD and standalone TP. But the standalone OD, standalone the OD and the standalone CPA cover. Two new variants are there. I will tell you.
Sir, one small question.
Sir, one
Sir,
question.
one small question.
Yeah.
Sir, for example, there are not
The
two
owner
vehicles.
is having standalone CPA cover.
Please ask one by one. Yeah.
Standalone CPA cover he has taken.
He has taken. Okay.
And even for that standalone CPA cover, we insist for driving license, sir.
Yes, he must be having driving license to drive that vehicle.
नहीं तो क्या होता है क्या?
Even for granting standalone CPA.
Or he can take PA if he is not having.
थोड़ा सा गुनगुना ठंडा पानी मत पियो.
He must be having license to drive that vehicle, and he must not be under the intoxication of liquor and drug.
हाँ, हल्का सा वो है ना गरम गुनगुना पानी तो उससे
hello, please mute your mic.
Hello. Sir.
All others may mute your mic. Yeah.
Sir, suppose he is not having driving license.
The
only option available to him is go for PA cover for 15 lakhs.
Now I was telling you that in other way, if he is not having his CPA cover, he should take a PA policy from miscellaneous department. That policy is valid for 24 hours. Our standalone CPA cover is valid only when he is or she is in connection with the vehicle and he is having driving license. It is limited only. That's why its premium is 275 only. So he may take PA policy from miscellaneous department. That is available coverage for 24 hours worldwide, and also it is not required that he must be in connection with the vehicle. Suppose he slips down in the stairs at his home and dies, then again cover will be there. He will be paid. But the situation is that while issuing our policy, his PA policy detail will have to be mentioned, and it should be at least for 15 lakhs. This is the real, or it may be more, no issue.
Sir, I had a doubt.
Majority, sir, my question, majority of the people, they prefer having a paid driver, though they are the owners of the vehicle.
Yes.
Because they don't have driving license. In that case, in that scenario, they should go for
scenario, they have to give undertaking that the vehicle is although in our name, we are not driving the vehicle. Or if it's a big fleet, we generally suggest that you take, in short, may take one CPA policy. 275 only. So this will be mentioned.
Sir, can the CPA cover given a two-wheeler?
Can any please speak one by one.
Sir, can the CPA cover given in a two-wheeler be also utilized for private car if there is an accident?
Standalone CPA policy is applicable for all the vehicles, all class of vehicles. Standalone CPA cover. But please listen to me first. Yeah. If CPA cover is given for truck, he was not driving the truck. I told you, CPA cover is required for each vehicle. Suppose he is having truck, he is having two-wheeler, he is having car. For all he has to take it. On the date of accident, he was driving two-wheeler, but CPA cover was not there. So we will not pay CPA claim. Or he can have standalone CPA cover. That will be applicable for each class. No issue.
Sir, do you advise in such cases let all the CPA be removed from all the policies individually and given a standalone CPA cover for all the vehicles together?
That's why this remedy was there. No? People asked, and IRD asked the insurance companies to come out with a standalone CPA cover. So it came in 2020. It is more than 4 years now. It is running. We are doing it.
Sir, can you,
So,
sir,
meaning
Sir,
the CPA
Question,
policy.
sir, one more question. If one party select in package policy CPA cover and in another vehicle when he was mounting got hit by a truck and get died, will it be
Suppose a
covered?
person is having A or B policy, like your question is that he was mounting in dismounting B vehicle, right?
Yes, yes.
He got injured and later on died due to accident with a truck. So B policy will be which policy will be will be triggered for claim? B policy, na? Hello, please
And
mute
if
your mic. Hello, hello.
even in
The
B policy,
policy which is triggered for claim will pay the claim. For example, B policy is triggered. Claim will be
in
registered
B
on B
in
policy, na? He will get that.
yes, in B
Actually,
policy CPA cover is not there. In A
actually,
policy
B
CPA
policy
cover is there.
CPA is not there, so he will not get. Because he
sir,
was
one
having
thing,
coverage under A, he is not having under coverage B, it is not given.
but if it is a standalone PA,
Okay, sir.
If it is a standalone CPA cover, it will be given.
it will
sir,
be
one
given.
thing,
Standard, I
Hello.
told you many times.
Sir,
I
can we,
told you.
sir, can we summarize that if there is a standalone CPA policy, then it is payable provided all other conditions are correct with or without any insurance policy?
If you ask one by one only, then I can answer. Yeah.
Sir,
A
if there,
person having CPA policy and
Standalone
he
CPA.
driving the
Standalone.
standalone CPA,
Right.
standalone CPA and driving the truck,
Right.
he is not registered in the owner. So it is claim is payable.
No. He must be, I have told you at the inception of this cover, he must be registered owner of the vehicle. So why, when he is not registered owner of the vehicle, why he will take CPA cover in that policy or standalone CPA cover? He must be registered owner of the vehicle and he must be having effective driving license. Right. I think I have spoken enough on this topic and this is enough for your exam time.
Right, sir, right.
Standalone
Otherwise,
CPA cover, is the vehicle insurance not mandatory, sir?
for standalone CPA.
Yes, sir.
Standalone CPA has no connection with any vehicle. You come to our office, you fill up a proposal form, we will issue a standalone CPA cover. We will not ask the vehicle detail. But the coverage will be when only you are registered owner of that vehicle and owner having this coverage in your name and having effective driving license. Coverage will be there. Either you are driving truck or you are driving a scooter.
and doesn't matter
Even
whether
if
we
the
have a
vehicle met
motor
with an
insurance policy or
accident
not.
does not, sorry, even in the case of vehicle is not insured or liability section of that particular vehicle is not in place.
Standalone CPA cover, in standalone CPA cover, we are not concerned with liability section. In standalone CPA, you can take like a PA policy. It is just like a limited version of PA policy.
Sir, better
Where
you
go
share
for
your
taking
email
PA
address
policy.
where you will get queries. We will move to next topic, please.
Sir, one last doubt, sir.
I have covered it in ample. I have already amply covered it. I think no more query should be there. But if
Sir, actually, our company conveyance scheme, car is on our company name, but the user is our employee.
Yes.
Whether the cover is has to take the cover, sir, not required.
See, when
ये
the
एग्जाम में नहीं
registered
आएगा
owner is,
सर.
I have already told you, it is given when the insured is individual. Suppose in conveyance scheme, vehicle is given to me, right? If the RC, the owner of the company, the owner will be United India. So why this cover will be given? This cover will not be insisted upon. When it is in the name of institution, partnership, company, it cannot be asked. It is only in case of individual or sole owner of the vehicle. I think I have amply cleared it and now we should proceed further. Otherwise our content will not be completed.
Sir, by any means, CPA cover is related to OD claim, sir?
ये एक नंबर का ही आएगा यार.
It will cover under premium is charged under liability policy. So claim is also accounted under liability policy.
Sir, आगे बढ़िए sir, आगे बढ़िए.
I will show you the policy later.
Please,
So
please, sir.
now you mute the mic. I will take some speed. Otherwise, it will not be covered. But I have amply covered it from all point of view, right? Or optional PA cover is there under 36 GRB. you can take up to maximum 2 lakh in the multiple of 10,000. You can additional premium is charged. No need to remember the rates. Coverage is same, 100%, 50%, and 100%. Cover full vehicle imported without duty, then 30% loading is charged. Even then, you need not to learn this. Vehicle required requisition by any government institution. If any government is asking for the vehicle and there is a claim, right? So the claim first will be paid by the government. Suppose something is left, so there was a loss of 10,000 and government has compensated for 6,000. For 4,000, we will settle the claim. No additional premium is charged when the vehicle is requisitioned by the government. Third party property damage cover earlier in Motor Vehicle 1988. Hello. And Motor Vehicle Act 1988, there was option given to the insured to limit his liability to 6,000 as per Motor Vehicle Act, right? So in our policy, there is a coverage for 1 lakh for two-wheeler and 7.5 lakhs for all other vehicles by default. So in this way, we will not be giving any discount. But if the insured asks that it should be limited to 6,000 as per statutory requirement of Motor Vehicle Act, he was allowed to take this option. But it was only at the time of renewal or taking fresh policy, no midterm. Second thing, suppose he was opting for limited TPPD of 6,000, this coverage was limited to 6,000, and in this case of scooter, 50 rupees discount was given. In case of car, 100. In case of three-wheeler, 150. And in case of commercial vehicle, 200. This was the earlier situation as per Motor Vehicle Act 1988. But as per Motor Vehicle Amendment Act 2019, this became effective from 1st April 2022. TPPD coverage option was removed. So it is like death or injury. But the Act has permitted the insurance companies to design the product, charge the premium as per slabs for limited cover or higher cover or a slab wise. But the option to delete this or remove this option was removed. So remember, this is the new guideline, and currently it is also deployed in systems. All the companies are not exercising. We are also not exercising for opting out of TPPD cover. So by default, it is no amount is still written there. What is the maximum amount and minimum amount is also removed of 6,000. So it is very important from exam point of view. You should remember. For maximum amount, later on the central government or IRD, whatever comes, whatever slabs are to be decided will be charged. But for now, we are not giving option to opt out this option. Now compulsory deductible for each and every claim, whether it is total loss or partial loss, is subject to deduction of compulsory excess. Table is there, I will show you later. Electronic or electrical items are there, additional items are there, additional premium is charged 4%. Declaration is given or invoice or bill, whatever is required from insured may be taken at the time of insurance. Use of CNG or LPG, if the vehicle is coming with inbuilt CNG, then we will be charging additional premium of 5% of OD premium in our company. But in some other company, there may be different treatment. In United India, we are charging 5% of basic OD premium. In OD section and in TP, we are charging 60 rupees. Got the idea? Suppose the insured gets the CNG or LPG installed during the currency of the policy and produces the RC, then we can charge 4% of the value of the CNG. CNG value or LPG value will also be depreciated in the same manner as I told you in GR8 at the time of renewal or at the time of insurance, fresh insurance. So this is the treatment. In third party section, 60 rupees mandatorily charged in both the cases. Additional premium is charged for 100 rupees where miscellaneous D class vehicle is there and fiberglass fuel tank is there. Suppose sometimes fiberglass item is there. Additional 100 rupees, but it is still rate is not required. Vehicle being driven for during driving tuition purpose. So RTA gives the RC with this endorsement that vehicle can be permitted for driving tuition. It has double clutch, double brake also, and RC is there. So risk is increased because new person is driving. So premium, additional premium is charged, which is OD premium 60% extra. TP premium will remain same, but OD premium will be loaded by 60%. For two-wheeler and three-wheeler, OD premium will be loaded 60% for both OD and TP. Only in case of three-wheeler and two-wheeler, we are charging 60% loading on both the sections. In rest of the sections, we are charging 60% loading on OD premium only. And limitation as to use, as I will show you later on, will be removed. Then vehicle will be used for commercial purpose also. To the extent that this endorsement is there. Now restricted cover, as I told you, the cover may be restricted when the vehicle is there in garage or not being used. Cover can be limited package cover, like we can tailor-made fire and theft with liability cover, fire and liability, or theft and liability. So premium rate is that fire or theft cover is there, then 0.5%, 0.50% of IDV rate is charged. And if fire and theft both are taken, then 0.75 of IDV is charged. Liability will be charged separately. In next section, you see when liability is also there, liability will be charged in full. And for fire and theft, 30% of ODPM will be charged. If fire alone is covered with liability, then 25% of ODPM is charged. If theft alone is charged with liability, then 30% of ODPM is charged. So OD portion, NCB will be paid only in this 45B. 45A NCB will not be paid because liability is not there. In 45B, liability is there. So NCB will be applicable only on OD portion of the vehicle. But again, it is prohibited to grant this cover for Class D vehicle. For Class D vehicle, we cannot grant this limited cover. NCB on fire and theft premium will be considered only. A discount for voluntary deductible and authorized automobile association, if it is there, we may allow. For non-conventional use of the vehicle, then we can refer to the TAC earlier. But now vehicles are coming with this electric vehicle. Electric vehicles are there. So rates are there. How to charge the rate? For example, private car is there. Rate for private car or taxi up to 1000 cc will be charged. And for two-wheeler, rate for bracket, this is for two-wheeler with capacity exceeding 150 cc, but not exceeding 350 cc rate will be charged. So whatever rates are there, we are charging for electric vehicle because there is no engine, there is no cubic capacity. For electric vehicles, you can charge the rate likewise. Otherwise, we has to, for other conventional, so we used to refer to TAC. Not TAC is not there. Only General Insurance Council is there. Towing is paid whatever is given in the policy. For example, private car towing is 1500, and for commercial vehicle 2500, and for two-wheeler it is 300. Suppose insured wants to take higher cover, he can take it. For private car, another 1500 he can take towing charge, which we are charging 5% of the amount, 1500. That will come, I think, 75 rupees only. And for two-wheeler, it will be 300. We will be charging 5%. Only 15 rupees will be charged. And 300 plus 300 will be the towing charge. So towing charge is given when the vehicle is damaged in such a condition and not able to drive on its own to the nearest workshop. So we pay the charges for driving, for taking the vehicle to the nearest workshop, including redelivery charges. Now, submission of statistics and this, it is not important. Now, type of policies in today's scenario are private car, motorcycle or scooter, and commercial vehicle. 3 policies are there. So liability policy cover as per minimum requirement of Motor Vehicle Act 1988, and package cover is there to cover loss or damage to the vehicle along with the liability. So what is a major difference in liability section for liability policy and in package policy? In package policy, if occupant is going there or fill and rider is there on a two-wheeler, he dies or meets with an accident, then he can also claim under third party liability. But in liability policy, he will not be covered. So this is the major difference. Although no additional premium is charged, but the liability section of package policy is wider coverage than the liability coverage given in liability policy. This you should understand. So private car and two-wheeler policy I have taken together. Both are used for social domestic pleasure purposes, right? Two-wheeler is a two-wheeler with or without sidecar. Both are there. Domestic pleasure purposes. It excludes the use for taking goods except samples. And it excludes the use for hire or reward, racing, pacemaking, reliability trial, speed testing, motor trade, and motorized three-wheelers vehicles used, including motorized rickshaw, cabin, battery scooter, are also covered under this private car. So the private car or two-wheeler are personal vehicles. They are used for professional purposes. You can take samples in the vehicle. You cannot drive the same for hire or reward, pacemaking, reliability trial, speed testing, or motor trade purposes, right? So this is the limitation as to use also. Vehicles are registered and permitted for private purposes only. We have to go by this definition and rate accordingly. Our premium rates are depending upon IDV of the vehicle, cubic capacity, geographical zone, and age of the vehicle. So limitation as to use, as I have already told you, these are there. Who is the driver? Driver is a person who is holding effective driving license at the time of accident and has not been disqualified from obtaining such a license, as I told you earlier. And in case of learner license, Rule 3 of Central Motor Vehicle Rule 1989 must be applied. It means he is driving the vehicle and a permanent driving license holder should be sitting beside him, and letter L should be written on both the sides of the vehicle, front and rear. So scope of cover under own damage section of the package policy is, it is a defined policy. Defined, it is not a, it is a comprehensive policy. Nowadays we tell that it is a package policy. It is not an all list policy. That's why perils are defined here. In case of any accident, we have to see whether the loss has been proximately caused by any of the perils insured under the policy or not. If it is not, then our liability does not exist. So what are the major risks which are covered? Fire, explosion, self-ignition, lightning, burglary, housebreaking, theft, road strike, earthquake, both fire and shock, STFI peril, accidental external means, malicious act, terrorist act, transit by railroad in inland waterway, lift, elevator, or air. If the vehicle is being lifted through any other vehicle or by air or by sea or any means, then it's still coverage is there. No need to take additional cover. You need not take any marine policy for this. And landslide or rock slide risk is also covered. This is the package policy section. So what are the exclusion? Yeah.
Can you please give an example for the self-ignition or explosion perils in motor?
Suppose vehicle is standing and due to short circuit, there is a fire. There may be explosion in the vehicle, or due to self-ignition, vehicle may burn. In any case, it is covered. Fire is originating in the vehicle, or coming later on, it is resulting in loss or damage to the vehicle. In all the events, it is a broader cover. It is not limited like fire you are thinking. Now perils, what are the perils excluded under section 1 of the policy? Risk
Hello.
not covered.
Sir, transit by sea and air, it is given, no? Here.
By road,
by
rail,
road.
inland waterway, lift, elevator, air, all are given.
But in geographical extension, that is not covered, no? During the transit, sea and air.
No, I am talking, this policy is only for geographical India, geographical area of India. When the vehicle is in between the two countries, India and others, suppose Sri Lanka, you have taken geographical extension for Sri Lanka. You are taking the vehicle by sea, suppose from India to Sri Lanka. When the vehicle is leaving India, the geographical frontier is left, then there is no cover. Within India, it is covered. Whether vehicle is flying on its own or being carried being under transit by railroad, inland waterways, lift, elevator, or air. You got the point, na? You got the difference. Yeah. It is very important for higher scale officers they must understand this type of question may come. So what is not covered under OD section of the package policy? Consequential loss. Consequential loss is not covered in most of the policies, I think. Depreciation, wear and tear, mechanical, electrical breakdown, failure or breakage is not covered. You should remember these coverage as well as this as exclusion, because there may be numerical questions in the exam. So you may be having some situation. So this must strike in your mind as what is wear and tear, what is depreciation, what is consequential loss, what loss or damage is claimed for mechanical or electrical breakdown. So that should be excluded from the calculation. There will not be straightforward thinking that what is covered or what is not covered. They will be giving you in a question form. So you should be having idea that these are exclusions. So while calculating claim amount, this should be excluded. I will tell you with an example. I will have to rush through because some practical session is also there.
Sir,
So
due
damage
to
to
brake
start.
failure, if any damage is happening, is the accident covered, sir?
Yeah, pardon, sir.
Due to brake failure, if the brake is not working on the vehicle has
Suppose a vehicle was, suppose a person was driving a vehicle and there was a steering failure, brake failed.
Yes, sir.
And vehicle hits a tree, right?
Yes, sir.
And got damaged. He claimed for 1 lakh. And the
Hmm.
loss or damage for repair of this steering rod is there, 10,000. We will exclude steering rod and pay other things, because steering rod has mechanically broken down, or he is claiming for brake, which is failed and accident took place. Accident took place. Please listen. Please listen to me first.
Yes, sir.
Brake failed and vehicle collided with a tree. There is a loss of 1 lakh. I am giving you the example. He is claiming replacement or repair of this brake, right? So brake charges will not be paid. These items will not be paid. All other accidental damage will be paid. Why? Why it will be paid? Brake failed before accident. You understand the logic? Steering rod got failed or got broken down before accident. Our policy is covering named peril. I told 2 minutes back. Our policy is a named peril basis. When the steering rod got failed or mechanical breakdown was there, none of the perils operated. I am giving you the logic.
Okay.
You getting? Though when
Yes, sir.
it is not operating, so it is not covered. But later, when there was accidental loss, it is covered under accidental accident means. So that's why we are excluding steering rod or brake replacement charges or repair charge, and others are paid. So this knowledge is very helpful while computing the claims. We will be doing 1 or 2 questions also. So it's a good question and for the benefit of all. So
Sir, just
consequential loss.
will that damage to the vehicle not be consequential, sir, because of the brake failure or steering rod?
But here the proximate cause is accident, no?
Okay, sir. Okay.
I have already told you approximate cause theory is very important. A brake failed or it is not so important. Sometimes brake failed, but no accident takes place. Here accident took place in spite of taking care. He tried to avoid the accident, but accident is there.
Yes, sir.
Accident
Yes.
is it is happening and unforeseen event. It is covered. So that's why I have given you with the example what is covered and what is not covered. And there is also a question for tire and tubes. So suppose damage to tire and tube, unless the vehicle is damaged at the same time. Only tire or tube is damaged. Vehicle was driven, tire is cut. He is claiming 10,000. Will you pay? No. When there is an accident to the vehicle, bonnet from bumper, front fender, and this headlight is also broken, and he is also claiming for tire which got cut, or wheel is also damaged. Then we will pay for the wheel, tire, tube, and also along with this. But tire and tube will be paid 50%. Depreciation is there, na? You know. Suppose there is a nil debt policy, so nothing will be deducted. Suppose he has taken nil debt policy, but loss is only for tire or tube. Again, claim will not be paid. So in that case, he will have to take add-on cover for tire or rim protect. We have already been selling this cover, tire and rim protect. If it is there, then we can pay for loss or damage to the tire alone also. Otherwise, if there is a loss or damage to the tire and tube, without loss or damage to the vehicle, claim is not payable for tire and tube. So you remember these two are very important for calculation of claim. If it is not clear now, then we will not be able to answer. Then another is any accidental loss or damage suffered while the insured is under the influence of liquor or drug. So it is under section 1 of package policy, right? That if he is having under intoxication of liquor or drug, he has drunk, so claim will not be paid. It's a violation of Motor Vehicle Act 1988, section 185. So police will be charging fine also, imprisonment is there, and because he's violating, so claim will not be paid. Earlier this was exclusion under package policy section 1.
Hello.
But in TP there was no defense. But in Motor Vehicle Act, please mute. It is very important topic. Please listen. Please listen. If you don't listen, you will be missing. Earlier, this was no defense was available for this influence of liquor and drug in TP. Suppose a person was driving the vehicle under the influence of liquor and drug and creates a third-party liability, right? So we were not getting defense. If we plead strongly, then court may give to some extent pay and recover rights, and that too not fruitful. Now pay and recover is also removed. But now with Motor Vehicle Amendment Act, this is a defense under the policy. If the driver is driving under the influence of liquor and drug, so we can take defense. But we have to take this defense strongly, vehemently at the time of written statement. If we are asking when the judge is going to finalize and issue the judgment, then he will not listen. So in our offices, we have seen that whenever any claim comes, there is late investigation which causes this type of problem. So if we are vigilant, we can save a lot of money for the company. We get the investigation done at the earliest and get all the proofs, and our written statement should be strong enough. And if all the defenses should be taken at primary stage only, and we have to see whether policy is covering the risk or not covering, or driver details is okay, driver was not under the influence of liquor and drug, so fitness is okay. All things should be taken care of. Now with this defense, it is a good sign that insurance companies can save a lot of money in TP claims. OD claims, it was already excluded. Now loss when the vehicle is used for a breach of limitation. For example, private car is there. At the time of accident, it was being used for hire and reward. Claim is not payable. It was being used for racing, pacemaking, speed testing, trial. So these are not payable. So keep it in mind that these are not payable. Limitation has to use as per RTO has to be taken care of. Whatever permission is there by Motor Vehicle Act, only for that purpose vehicle can drive. Now driver clause is there. Driver clause means if he is driving the vehicle in contravention of driving clause, means he is not having valid and effective driving license, or he has been disqualified from obtaining the driving license, he is not liable to claim. He is not entitled to claim. So this is breach of driver clause. And in case of learner license, I have told you he has to comply with the provisions of section 3 of Central Motor Vehicle Rules, right? So losses arising directly or indirectly due to war and warlike peril, nuclear risk not covered, loss or damage to accessories, unless this is also important. For example, accessory is there, and at the time of claim, the accessory was not on the vehicle, it was removed from the vehicle and put some at other place, and the accessories got damaged due to fire, accident, or any other peril, flood or earthquake, then that is not payable because accessory was not on the vehicle at the time of accident. So you have to keep these 4 or 5 things in your mind while calculating the claim amount. I will be showing you. So there will be questions, and if you are having this in mind, what is covered, what is not covered, and what is to be excluded while computing the claim, then you will be able to answer. So loss when the vehicle is being used outside geographical area, as I told you, geographical frontier is the GR1. Geographical frontier is our limit within which the vehicle can fly. Or any contractual liability under which under a contract is there, and under a contractual obligation, one person is liable to compensate. So that he has to compensate. So in motorcycle and commercial vehicle, there are additional exclusion, loss or damage to accessory by burglary. Just wait. कहाँ से संगीता आ जाएगा? हाँ मैं लिखा क्या नाम आप क्या चाहिए नॉर्थ इंडियन में मिलेगा कुछ हाँ नॉर्थ इंडियन मिल जाएगा चलेगा सर So in motorcycle, if accessories are stolen, nothing other thing is stolen, then it is not covered. For covering this loss of accessory, you have to charge additional premium, right? But in car, if accessories are stolen, if they are on the vehicle, then claim is payable. So remember this difference. Any commercial vehicle damage caused by overloading or strain, claim is not payable. But there is some condition to some extent. Is overloading is there, then Gipsa manual or claim guidelines are there. All companies are following. They are either to some extent it is allowed, and thereafter claim is treated as non-standard. I will tell you through in a circular. But if you see that overloading is there, claim is not payable. The loss or damage to tire, tube, mudguard, lamp, bonnet, side part, painting, and other damaged portion in commercial vehicle other than commercial two-wheeler and taxi. Other than commercial two-wheeler and taxi, there is a special exclusion under IMT 21, which says that loss or damage to tire, tube, mudguard, lamp, bonnet, side part, painting are also excluded with above exclusion, whether they are damaged with the vehicle or not. So these are excluded under IMT 21. So what to do? If we want to cover these, we have to pay additional premium under IMT 23, which is 15% of the basic OD premium. After charging this premium, claim will be settled after application of applicable discount only to the extent of 50%. For example, tire is damaged along with other things. On tire, and we have charged 15% additional IMT premium. So coverage for tire will be after 50%. For example, 1,000 rupees tire is there. After application of depreciation as per GR 50%, it will come to 500, right? So 500 will not be paid. Again, 50% of 500 means 250 will be paid. So the coverage under IMT 23 is 50% only after application of depreciation as per IMT, as we told earlier. So these are the again general exclusion which are applicable to all sections. Any accidental loss or damage occurring outside the geographical zone, geographical area, contractual liability, limitation as to use, driving license, driving clause, consequential loss.
Sir, please explain about this tire tubes now once again. IMT
Sir, in
21.
IMT 21, painting means paint material or painting as well, sir?
Please hold on.
In IMT 21 exclusion, sir.
See.
Only the paint material, sir, or even the painting labor, sir?
Please hold on. Loss or damage to tire, tube, mudguard, lamp, bonnet, side part, painting. Here painting includes both for commercial vehicle, na labor as well as this part.
Material. Okay.
Yes.
Okay, sir.
Or in the private car two-wheeler, we are charging depreciation. I will tell you on material component only. Here painting is altogether excluded. For covering the painting altogether, we have to assess it, apply depreciation as per this I will tell you through policy how we will apply depreciation on painting material, and then 50% will be paid.
Okay, sir.
Hello,
So
sir. Hello, sir. If we have taken a IMT 21, quad for tire tubes and lamps, and there's a nil dep policy in commercial vehicle, then how much amount is payable?
Good question. Good question, sir. Very good question. I appreciate your concern. We have not taken here nil dep cover, so the treatment I told you will be like that. Okay. Suppose the insured is asking for nil dep cover for commercial vehicles. So nil dep cover in United India is given only when IMT 23 premium is charged. Number one, when IMT 23 premium, that is 15% of OD premium is charged, we give nil dep cover, and in case of claim, these all are covered without any depreciation as per our GR as well as in under this IMT 23. Then full will be paid. So there is a circular on our internet site also. Earlier there was dispute whether full will be paid or 50% will be paid. 50% of the earlier portion will be waived. Another 50% will be applicable. So a number of disputes were there. So company came with the circular.
Sir, this cover of 50% with nil dep is only available in our company. In other companies, if you even take the nil debt policy, they will only give you 50% of the I-23.
Actually, the examiner cannot ask you like this because it is different. But from the point of view United India, I know this is the treatment. In some of other, I think PSU also, the practice is followed. I think now most of the companies this practice is followed because we are charging nil debt premium and this IMT, so the customer should not be harassed or put to some technicalities. He should be given coverage. So this was the intention, and the circular came later on that when the IMT 23 PM is charged along with nil debt, so claim will be paid full. Got the idea?
Sir, one
Now,
question.
general exclusion, I told you.
Sir, one
General
question is,
in
private car, insured has taken tire tube protection or rim protection.
Yes,
and
sir.
at the time of accident, only tire is hit and tire is cut. Then
Yes.
what will be claim
Claim will be
payable?
paid.
Only
Claim will be paid for tire. Now, as per
only
add-on cover condition is there na for each company. For each company, coverage is there as per coverage terms. Suppose some up to some limit, tread limit is there. If it is damaged, then it will be claim will be settled to that percentage.
यानी कि वो टायर का फुल अमाउंट हम पेड करेंगे. Doesn't matter 50% or
अगर
not.
वो फुल्ली क्लेम का डैमेज, जैसे अब हमने आपको ट्रेड लिमिट बताई है, कितनी लिमिट तक टायर डैमेज हो गया तो उसके परसेंटेज है. हमारे एड ऑन कवर भी आपको खोल के दिखाता हूँ, तो हम उतना परसेंट देंगे. हर कंपनी का अपना अपना होगा कितना देंगे. बट if tire protect is there, a general question is there, if tire protect is there and only tire is damaged, then claim for tire will be admissible. Now there is no need to go in further. New India, what New India will pay, what United India will pay, because all are having their different add-on covers, nil tire covers. So their coverage, exclusion, rating, everything will be different under their file and use. Right? So in paper, this will not be asked in this way. They may ask whether it will be covered if tire protect is there and tire alone is damaged. So yes, it will be paid as per the terms and condition of the policy and add-on coverage. Okay.
Sir, tell me about something about painting, sir. If it is given in whole.
In painting, I will cover the question, numerical question, and I will tell you the difference. I'm just completing it and going on the practice session. There I will tell you how paint depreciation is charged. How the depreciation is charged on painting. Right? Let me rush through it. Yeah. And in third party liability is there, section 2, conditions under the policy. These are also very important. Notice of loss. So immediate notice of the loss has to be given by the insured, either phone, telephone, or mail, or you can through online he can also intimate, or through any other person he can intimate as occurrence of the loss. But notice of loss should be immediate, and immediate is seen in context of the nature, cause, and circumstances of the loss. So this immediate definition differs from time to time, depends upon the eventuality which had happened. But there is no time limit is mentioned for days here in like in other policies. But in motor, notice of claim should be given immediately. Right? So no admission offer with any third party when loss takes place. Maintenance of the vehicle, the insured is required to take proper maintenance, a safeguard of his vehicle. Right? In case of accident also, he should not leave the vehicle and later on claim for the vehicle. He has to take it, ensure safety of the vehicle, proper place and parking. Then policy can be cancelled, as I told you earlier, but now again there is a difference. Insurer or insured can cancel the policy as per tariff by giving 7 days notice. Refund of premium is given on pro rata basis. If insurer cancel, if insured gets it cancelled on short period. But there is difference in this cancellation clause as per new circular. I will tell you. Contribution, if the vehicle is covered by more than one policies and loss or damage is there, so all the insurer will be paying the claim in rateable proportion of the loss to protect the principle of indemnity. Arbitration clause was earlier there for retail product. Now it is removed. But for your knowledge, I can tell you arbitration was there when claim was admissible, but the amount of claim was in dispute. Only quantum was in the dispute. So those were referred to arbitration, so that early conciliation should be reached and cost of litigation should be reduced. But now this arbitration clause is not there for retail products. Remember it. It is for all the departments. This is a 1-number question for all of you. Only insurer has the option to settle the claim either on repair basis, replacement basis, cash basis, cash loss basis. So whatever it is economical for the insurer, the mode of settlement will be opted by the insurer, right? Next is, in case of death of the insured, policy will not terminate immediately. It will be valid for 3 months. Within this period, the insured's legal heir, to whom the custody of the vehicle is passing, has to approach the insurance company and get the vehicle endorsed, right? He has to surrender the certificate of insurance, give the proof of death of the insured, submit the proposal form, and the policy will be transferred his name. NCV will also be given to him, no issue. But suppose if less than 3 months period is left under the policy will be, suppose 1.5 month is left and the insured has died. Policy is expiring 1.5 month later. So the policy will remain effective for 1.5 month only. In commercial vehicle also, most of the things are same. But the commercial vehicle is running for hire and reward. This is the main thing. The commercial vehicle tariff is there. I told you, section 4, you can refer the tariff also, because it is in this limited time, it is not possible to go everything. I am telling you in brief. So section 1 damage is there. Coverage is same as per coverage told you earlier. All the general exception conditions I told you earlier are also applicable to commercial. But in commercial vehicles, some additional exclusions are also there for OD section. That is overloading or strain of the vehicle. Claim is not payable. And this IMT 21, that is a special exclusion, which we have already discussed. Commercial vehicle tariff is there for goods carrying vehicle. Under A section is there. Public carrier. Now private carrier for 4-wheeler is not there. A2 is applicable for private carrier 3-wheelers. Now A3 and A4, all are goods carrying vehicle. But B is covering trailers only. C section covers passenger carrying vehicles. D covers miscellaneous type of vehicle. E, F, G, these are trade policies, right? So, and for detailed, you can please refer to India Motor Type 2002. If you ask, I will share with the team. Underwriting factors here are IDV and zone of the vehicle. Zone, I have told you that there are 2 zones for motorized 2-wheeler commercial vehicle and taxi. Zone A, Zone B, right? Zone A covers metropolitan cities as well as Ahmedabad, Bangalore, Hyderabad, Pune. 4 + 4, 8 cities are there. And Zone B is covering all India, rest of India. And for all other commercial vehicles, there are 3 zones, zone A, B, C. A covers metro cities, B covers state capital, C covers rest of India. Now other important underwriting factors are IDV zone and this age of the vehicle, and GVW in case of goods carrying vehicle and in case of commercial vehicle licensed carrying capacity. So IMT 21, I have told you, section 2 in commercial vehicle deals with third party liability, and section 3 covers towing of a disabled vehicle. Suppose any vehicle is disabled on the road due to accident, not able to ply, the commercial vehicle can help to tow it to the nearest repair workshop. When it is towing the vehicle, it is also covered. So what is not covered? Suppose our insured vehicle is towing that disabled vehicle, and with the disabled vehicle, there is a third party liability caused by the towing vehicle. Towed vehicle causes third party liability. That third party liability will be clubbed in our insured vehicle. If the towing vehicle is damaged, that is not covered under our policy. If any goods carried in that towed vehicle are damaged, that are also not covered under the policy. So what will be covered for the towed vehicle? It will be only for liability. Third party section of that towing vehicle will be extended to our third party liability. And this is allowed only because he is not towing the vehicle for hire and reward. And no own damage cover is available for the towed vehicle. I told you. This is important from exam point of view. And section 4 is a CPA cover. I have elaborately told you what CPA cover is there. Now tariff for trailer is there. Any truck, cart, carriage or any other vehicle, including agriculture implement without the means of self-propulsion, it is drawn by the horse or vehicle.
Excuse me, sir. Excuse me, sir. Can you explain the towing vehicle concept again?
Yes,
Suppose
sir,
a
please.
vehicle is damaged on the road and our commercial vehicle is having policy, right? Our commercial vehicle is there, Tata 407. It is going on the road. A vehicle is damaged on the road and it has to be helped. So our vehicle can help in towing that vehicle to the nearest workshop or place. So this is allowed under section 3. So while towing that vehicle, if our vehicle is damaged, it is covered, right? If our vehicle meets with any third party liability, it is covered. Number 2, if we are towing the another vehicle, suppose we are towing a Ashok Leyland vehicle that is damaged, and due to Ashok Leyland vehicle, third party liability is incurred with that drawing vehicle. So that liability will be covered by our third party liability. Next situation, if the towing vehicle is damaged, towed vehicle is damaged, Ashok Leyland vehicle is damaged while towing, that will not be covered. While towing, if the towed vehicle goods are damaged, those also will not be covered. So all those will be covered under his own Ashok Leyland policy. But its third party liability section will be clubbed in our third party liability only. You got the idea, madam?
Sir, if
Thank
sir,
you,
if,
sir. Thank you so much.
sir, if our vehicle is A and we are doing B vehicle, if B vehicle create the third part liability, also we are liable.
Yeah, I told you now. I am a vehicle. I am having insurance policy. I am towing vehicle B, and while towing B vehicle incurs third party liability. So that third party liability will be made in our policy. Vehicle A third party liability policy. I have clearly told.
Sir, what about towing? Can a private car or two-wheeler tow any other vehicle, sir?
Any vehicle. It is not mentioned that it is only commercial vehicle. But only commercial we can tow any mechanically disabled vehicle. Any mechanically vehicle. But it should not be for hire and reward. He is not charging anything from him. Out of courtesy, out of help, he is doing this.
Private car also can tow, sir. Any?
There is no question of that. It must be commercial vehicle. Any vehicle.
Okay, sir.
But it should not be for hire and reward. He is doing only out of goodwill gesture. So trailer, I was telling you, a trailer can also be insured. Premium rate is there, depending upon the number of trailers towed. When more than one trailers are owned by, but one trailer is towed at one time, premium is charged for all the trailers. So rating is given in the tariff when he is having more than one trailer, but one trailer towed, or if he is having more than one trailer, but towed at any time more. So rates are given, so there is no issue. No concession for laid up for trailer, as I told you, is applicable. Towing vehicle and trailer are treated at one single unit for the purpose of NCV. Yeah, it is important. Suppose there trailer is there, truck is towing a trailer and damage is there, accidental damage is there to the trailer. A trailer is under claim. So NCB for towing vehicle, and that is horse and the trailer, both will be affected. It doesn't mean that NCB for trailer will go on. NCB will not be given for both. Remember it. Now tariff for vehicle used for carrying passenger for hire and reward is under section C. You can refer the motor tariff for this. And following class of vehicles are vehicles which have been classified and to be rated under goods carrying. Earlier they were rated under commercial vehicle under section D, miscellaneous vehicle. But by this circular of IRDA dated 30th March 2012, these are removed from class D section of the India Motor Tariff, which consists of 58 vehicles, and these vehicles have to be rated under goods carrying vehicle as per goods carrying GVW, goods gross vehicle weight. So what are they? It is also important. Non-agriculture tractors. So if it is agriculture tractor, that will be covered under miscellaneous D class vehicle. Miscellaneous D class vehicle premium is very less, and they are using road rarely, or a little use is there. That's why the rate is less. But these are non-agriculture tractor is being used for commercial purpose. That's why it was removed from that, and it was added in goods carrying section of the 4A. From 4D, it was removed and added in 4A. As per GVW, it will be computed. Likewise, dumper, milk van, oil and petroleum transport vehicle, refrigeration, pre-cooling unit, tanker, tipper, electric trolley, tractor, traction engine, or trolley and goods carrying tractors. These all are commercial vehicles and will be rated only in goods carrying vehicle. I have come to know in various offices, even now, many people are doing wrong underwriting because of lack of knowledge. Dumpers are being insured under miscellaneous vehicle, tippers are insured under the. It is more than 12 years old circular that dumpers, tippers, these tankers, they will have to be insured under goods carrying vehicle. So keep it in mind in office also while working so that there is no wrong underwriting and in the time of claim there will be hardships. So it should be known to all. And in the miscellaneous section, there are also some policies which are rarely using roads and they are working on sites. So although they are registered, but they can be issued non-motor policies because they are not coming on the road. So no third-party liability is required. So like mobile crane, mechanical navies, shovel, grabs, rippers, excavator, fork, lift, bulldozer, bull grades, drilling rigs, dumpers and tippers, which are exclusively working on the site only, not coming on the road, dragging excavators, mobile unit, and any other vehicle which is used only on the site, right? And site clearing or leveling equipments and this goods vehicle. Because they are limited to the site, they can be issued non-motor policy. In engineering also, it is possible to issue that policy. Now the question is that when it is coming on the road from going one side to another, it has to use road and come on the road. For that period, it has to take motor policy for liability. Otherwise, it cannot come on road as per section 146 of Motor Vehicle Act, right? Otherwise, if it is using a limited site, non-motor policy can be issued. So mobile units are there in miscellaneous D class vehicle, which are, there is a risk of overturning. Overturning is not as a tool of trade when the vehicle is being used and it is overturned. For example, mobile cranes are there, mechanical levies and shovels. While using as a tool of trade, if there is overturning and there is a damage to the part, the claim is not payable in the commercial section. So if you want to cover this, we have to charge additional premium, which is also quite high, 0.5% of ID. And it is covered under IMT 47. But this covers overturning of the vehicle while being used as a trade also. Otherwise, if accidental lossy damage is there while not being used as a trade, it is automatically covered under the policy. So this difference should be understood. Now we go for motor trade policy. There are three types of trade policies: motor trade road risk policy, motor trade transit risk policy, and motor trade internal risk policy. So what is the difference? So motor trade transit risk policy is a policy which covers vehicle traveling on its own power from one place to another place. Long distance are there. For example, a big commercial vehicle is there. Chassis is built in Chennai and it is going in Delhi for cabin work, body work, seat work, electric work, or so many other works in the commercial vehicle. So it has to travel on its own from one place to another. With trade certificate, it will be traveling. So claim we can cover this vehicle under motor trade transit response. Long distances are involved, right? So and vehicle is running on its own. Remember it. So separate policy can be given for each chassis, or we can issue declaration policy covering the chassis on declaration basis. Insured will be paying, declaring the details of the vehicles, and we will be charging the premium. Liability premium is that distance up to 2,400 kilometer and above rates are there. So rate you need not to learn, but for an idea, I want to tell you that distance when it is exceeding more than 120 kilometer and exceeding 3,600 kilometers and so on. So we prefer to use transit risk policy. For smaller distance, we can issue motor trade road risk policy. This is one of the difference. Say for 50, 80 kilometers within city area, you can issue motor trade road risk policy. Coverages, there is no difference. Coverage for motor trade transit risk policy and road risk policy will be as per commercial section as we described above. Because these are commercial vehicles, so the coverage will be as per commercial vehicle or type of vehicle use for which it will be put later on. So liability premium is also there for 2,400 kilometer and above. Rates are there, so we have to charge it like this. And additional rate is charged for deletion of 50% depreciation for tire by charging 1% additional premium. So we can cover the tire for full. And the commercial vehicle policy from no need to learn this. The cover is limited to the risk during the transit risk from one point to another. Once the vehicle reaches to the named destination or place, coverage will expire. Coverage has to use to be modified under the policy, and the policy will not be covering for hire on reward. During this travel, the policy will not be covering use of the vehicle for hire and reward. It should not be loading the goods or passengers. It is simply going from one place to another. For racing, pacemaking, reliability trial, or while using trailer except the towing of any disabled. Trailer is also not allowed, but if any disabled vehicle is there, it is helping to tow it, only then it is covered. Now motor trade road risk policy, as I told you, it is given for limited distance in the cities. It is issued in two ways, name driver basis and TC, trade certificate basis. For new vehicles which are unregistered with dealer or manufacturer, they are in yard, from yard to showroom and showroom to yard, we give this policy. As there is no registration number, we give the policy on TC basis, trade certificate basis. The insured has to apply to RTO and get the TC. Based on the TC, we cover the policy risk. The coverage will be identical to commercial vehicle, and driver must have the license to drive that class of vehicle also. This should be remembered. So, and TC, a name driver basis is used when the vehicle is already registered. Second-hand vehicles, which are under sale for with the dealer, they are coming from one place to another for display. To cover the transit period, we issue name driver basis TC. When the vehicle is to be driven, the name TC, named driver plate will be put in front of the vehicle, and in case of new vehicle, trade certificate will be put, and coverage is there. Issuance of policy for fire and or theft risk without liability cover is not permitted. Limited coverage is not permitted here. Cover up to 25,000 rate is there. For sum insured up to 25,000 and for above 25,000 value, we are charging rate different. For up to 25,000, we are charging 0.25% of the IDV, and for the balance, we are charging 1%. You need not learn the rate also. Towing charges is there, 150. Premium is charged on the basis of number of drivers. Number of drivers for this used vehicles and number of TC for new vehicle. Any claim under own damage section of the policy is subject to compulsory deductible. It is there. Loan or hire of the vehicle to customer by motor dealer. If motor dealer is giving the vehicle to loan to any customer, this can also be given as an add-on cover. Cars of private car type let out by motor dealer on loan or hire to customer. The rate is given. Sometimes they may ask rate. Package policy, we are charging 12 rupees per day for a period not exceeding 12 months with a minimum of 330. And liability premium is rupees 2 per day, minimum premium 175. And motorized two-wheeler is there, package policy rate is there. For demo and testing, if you want, then additional premium will be charged. Rate is given. Demo and testing. Test is not covered under main policy. Demonstration and tuition driving is there, then loading is there. Fine. Wider legal liability to cover paid driver. If you want more than this WC, then earlier it was 25, now it is 50. You can charge 50 rupees. Additional rate for at 1% is charged on the basic OD premium to cover the tire for full value. Minimum 5 rupees per week. So now what is cover under internal policy? It is a workshop policy. The policy covers the risk of loss or damage arising due to accidental external visible means while the vehicle is kept in or premises of the insured motor dealer or his occupation. So it means generally this policy is taken by workshop when the vehicle is there and there is loss or damage. So insurance liability under package policy is maximum 50,000 and one accident for OD and 1,50,000 for TPPD and third party property damage and unlimited for bodily injury. Excess is already given, we have to apply. The coverage is there, you can see. Premium rates are charged as per the superficial area occupied by the motor trader. For example, rates are given up to 2000 square meter, and it is more than we can charge higher rate. It also depends on the wages given. So package policy rate will be 0.2-0.8% on the wage rate plus 150, and liability rate will be 0.28% of wages. If the total area exceeds 2000 kilometer, again the rate will be loaded. It is as per the tariff. For exceeding 2000, the rate is there. Package policy 15 rupees for every additional 1000, and liability 8 rupees for additional 1000. Suppose open parking cars are also part of outside the workshop, so we can cover that. So 50% of the superficial area is taken into account for this add-on, and open cover car parking is also covered. But it should be adjoining to the motor trader premises. So whatever area is declared by him, open car area, 50% is considered for that rating. If he is the workshop owner is having more than one premises for covering getting repairs and doing the work within the area of 450 kilometers, so we can treat it as a single premises. Premium will be charged for both the units together. TPPD fire is not applicable. The fire is not covered, you remember it. Work away from premises, if work has to be done away to any other premises, additional rate has to be charged at 0.065%. Minimum is this. For showroom, where premises occupied as showroom, only 50% rate is charged. Okay, this is all about this. I now show you add-ons. So these are the add-ons of our company. There may be different add-ons for all other companies, and mostly these add-ons covers are. Please hold. Hello, Anand. These are the prevalent add-on covers: nil dep cover, engine gearbox protection cover, return to invoice, medical expense, courtesy car, personal effect, consumable, loss of key, platinum PA, tire rim protect, pet care, RSA EMI protect. So I will share this slide with all of you, so you can go through it. Nil dep covers the depreciation, right? And by charging this, we will not be taking effect of this depreciation in partial loss claims. Nil dep cover is based on sometimes some companies are charging an OD premium, some charging on IDV. So terms and coverage will be different, but you should have idea. What engine and gearbox protection covers? Suppose there is an accident, lubricant is one stone is there, car driver is driving the vehicle. It hits the vehicle from rear inner side, and there is a hole in this and lubricant is leaked out, and later on the vehicle will seize, engine will seize, there is a loss. Or there may be situation in case of heavy rain or flood, the vehicle is stuck up in flood water, and in short attempts to start the vehicle, and when he tries, then ignition starts, and then the engine sucks the air, and along with that air is there, or water is there, all internal parts are damaged. So that is a consequential loss in both the situation I told. That is not covered, but all other things are covered. For example, if a vehicle is stuck in a flood and there is a damage, so loss or damage caused by water is covered for cleaning, oil and seats, floor, etc., or whatever damage is there, seats, etc. But if the insured attempts to start the vehicle and water is sucked and parts are damaged internally, engine and gearbox, those will not be covered. To cover those, we can have this engine gearbox protection. So we are having standard and platinum cover. Other companies are having different covers. So RTI cover is there, return to invoice in case of any loss or damage to the vehicle, total loss. Then insured will be given IDV. But there will be a difference between the invoice value on the date of insurance and the IDV because of age of the vehicle. So with this cover, we can give him the difference between invoice and the IDV. So insured will be compensated like this. This is return to invoice clause. And in our company, we are also paying road tax and registration charges to the extent of 10% of IDV. You can also, from other companies differs. Medical expenses are also there in case of accidental injury. To some extent, as per defined limits, medical expenses are paid. Courtesy car is there when there is a loss or damage and for the period the vehicle is under repair. So for this period, the insured will be using any other taxi and he is producing the bill. To the extent agreed, we can give him. Personal effects, whatever covered due to accident or loss, there is loss or damage to our personal effects, then it can be covered. Some companies are giving coverage to laptops and some are not giving. So it depends upon how the product is filed. Consumable is a lubricant, oil, grease, etc. Nut bolt. These are not payable whenever there is a claim, accidental claim. To cover all these, the insured pays additional premium and these are covered. So loss of key is there. If any key is broken, stolen or damaged, then replacement of the key is there. Then we can pay for that as per the limit.
laptop is covered, sir. Personal effect पे?
In our company, it is not covered, but in some companies, they are giving under laptop personal effect cover. It depends upon the type of add-on covered product filed. We are also thinking that there is a demand from dealers and manufacturers, OEMs also,
Yes,
that
sir.
we should cover laptop.
Yes, sir.
Now,
Yes.
Platinum PA is also there in addition to GR36B option for PA cover for 2 lakhs. Additionally, if some person wants, we can give higher coverage here. Tire and new protection we have already covered. Pet care is already there. United India is the only company which has brought this cover for a pet dog.
Yes, sir.
So for 25,000, it is there. If in accident, pet dog is died due to accident, then there is this amount is paid. And in case of injury, some treatment cost is also there. Another important cover is roadside assistance in case of loss or damage to the vehicle. In case the vehicle breaks down, it is required some help of towing to the nearest workshop. Then a roadside assistant is there. Some medical help or other many fancy covers are there nowadays. We are also giving this cover. And extended cover can be also offered, then premium will rise. Generally, premium for this rise is in the range of 15 to 25 only. Very competitive. Suppose your vehicle, the fuel is run out while going. So you may call the agency, they will come and provide you the fuel, and the cost of fuel will be charged. If any part is replaced, then they will charge for the part. For other service, it will not be charged. If tire is punctured, then they will repair the puncture. So likewise, these types of services are there. It differ from company to company. EMI Protect is there, for example. Now electric vehicle are there, hybrid vehicle are there. So the cover for the battery is there. If during accident this battery is also damaged, it is covered. But sometimes due to overcharging or some short circuiting, there is loss or damage to the battery. And battery is costlier. Around 50 to 60% of the cost of the vehicle is battery.
Excuse me, sir.
Yeah.
Sir, I have one doubt.
Yeah.
Hello?
Yeah.
Sir, hydrostatic lack damage, is it covered under flood claim?
Hydrostatic damage, I have discussed in detail now, earlier also. Suppose that there is a flood or heavy rain, vehicle is stuck up, right? There is damage to the claim, damage to the vehicle, that is covered under our policy, I told you. But during this heavy rain or waterlogged situation, insured attempts to start the vehicle, right? When he starts the vehicle, air and water is sucked in the engine and parts are damaged. Piston rings, rods, internal parts are damaged. Heavy loss is there. So that is known as hydrostatic damage. That is not covered because that is considered a consequential loss. So what we cover? We cover the direct loss to the vehicle due to water. So this is not due to direct loss. Number two, if you take engine and gearbox protection clause cover, then this will be covered. Right? Got the idea?
Yes, sir. No.
Now,
Please tell
EMI
me
Protect is
whether the
covering the battery and battery related. Hello?
no, sir, 1 second.
Yeah.
Sir, please clarify me whether the hydrostatic damage is covered under flood coverage or not.
It is covered under hydrostatic. Once we have taken engine and gearbox protection clause, now it is covered.
No. Are you saying it should be it is covered under only if I ensure take engine gearbox protection?
Yes.
Or it is covered automatically under a simple normal own damage policy?
Yes. Nee, suppose I have told you twice now. Our policy is covering flood and allied perils now. That is covered.
Yes, sir.
Suppose due to flood, water is there and our vehicle is damaged. Cover is there for engine and all other things also. For the whole vehicle, cover is there.
What is the necessity for engine gearbox protection?
Yeah, I am telling you. Suppose you are going, there is a heavy rain. Your vehicle is stuck up in a waterlogged condition. Getting my point? And vehicle is stopped. When the vehicle is stopped, you are trying to start it. When you try to start it, engine will suck it. Water will be sucked inside the engine. It will damage the internal parts of the engine, like engine rings, piston, and for many other parts. All technical. So engine will be totally damaged in that case. There will be heavy loss because you have attempted to start the vehicle in a waterlogged area. Rather, you should not start the vehicle in waterlogged situation, and it has to be towed to the nearest safe place.
Another case.
This is why engine gearbox protection is taken.
In another situation, when the lubricant oil is leaked, when the lubricant oil is leaking by an accidental external means, accidental damage.
Yeah. Suppose there is an accident, massive accident, and the engine lubricant is also removed and leaked out. But you are not driving the vehicle, then no problem. Internal parts will not be damaged. Internal parts will be damaged only when the level of lubricant is reduced and you are driving, keeping on the vehicle driving. Due to friction of the parts, internal parts will be damaged. No? You are running the vehicle and lubricant level is already less. It has to be adequate level. So that is a consequential loss, na? Because and lubricant was not enough to drive the engine, but you are driving. At sometimes, after sometimes, due to friction, it will stop and internal parts will be damaged. Accident, you are able to find that it is okay. Sometimes, when there is a boulder inside the vehicle and it hits the place where engine lubricant is stored, you are not able to know. It is leaking. After sometimes you will know that it has gone out and the engine has seized. So this situation comes there. In that case, it will help. This cover will help. Now, EMI Protect will cover cause loss or damage to the battery parts and battery due to overcharging, right? Or this loss or damage to the battery alone, short circuit, etc. So I have given you a brief idea. This detailed, I will share with you the team.
EMI
you can,
what is the abbreviation?
EMI preview.
EMI is electric vehicle cover. EMI Protect.
Sir, what is hybrid vehicle?
Hybrid vehicle is also some battery system is there. Some I don't know this in technical too much, but hybrid vehicle has some regenerative braking system is there. When you are driving the vehicle, it stores energy. Automatically. Then it is used for the fuel is saved. And electric vehicle is purely electrical driven by battery. Hybrid vehicle may or may not be electric vehicle.
Sir, sorry, please elaborate EMI, sir. Elaborate fully.
Battery, these are the electric vehicles are driven by battery. So there is a battery is very much costly. Loss or damage to the battery will suppose 10 lakhs of IDV is there, so battery is causing, let's say, 5 lakh or 6 lakh. In case of loss or damage to the battery alone, so the vehicle is lost, damaged. So this is not covered. To cover that loss or damage to the battery due to overcharging, short circuiting, we can cover it. Otherwise, we will be covering accidental loss or damage to the vehicle only.
Okay, sir.
It is there. Now, very important thing, I will rush within 5 minutes. So this is a master circular on general insurance product 2024, which is applicable from 1st April 2024. It is very important. The background of is this, that the tariffs have been de-tariffed now, and all the general insurance have been asked to devise their own products, which must be simple and easy to comprehend for the insured. So there should be an innovation, and the product should be tailor-made to suit the requirement of the insured. So in order to bring about better products in the market, the IRDA has asked that you can devise your own product, leave the rule-based underwriting and proceed for principle-based underwriting. You can devise your product and get it approved through use and file, and then sell it. Provide better experience to the consumer. So in order to provide and encourage innovation and easy and available products to the insured, the de-tariffing is there. Now it also aims at TAT to be adhered for all the insurance processes, whether it is underwriting, endorsement, policy, claims, settlement. So TAT has to be adhered to. It is a stricter terms. Product may be designed, priced, and enabled as per insurer's own experience. Right. Now, general information. Hello, are you able to listen me?
Yes, sir.
Hello.
Yes, sir.
Yes, sir.
Yes, sir.
Yes, sir.
Excuse me. Hello.
Yes, sir.
Yes, sir. Yes,
Yes,
sir.
sir, you are audible. You are audible.
Yes, yes.
Yeah.
Am I audible?
Yes, sir. Yes, sir.
Yes, sir. Yes, sir. Yes, sir. Please.
Am I audible?
Yes, sir.
Yes, sir. Yes, sir.
Yes, sir,
हाँ सर
please.
आवाज आ रही है
आ रही है, sir.
Am I audible?
Yes, sir.
Yes, sir. Seems he is not.
Am I audible?
Yes, sir. You are audible, sir.
हाँ सर आवाज आ रही है
Sir, please carry on. You're audible.
सर आवाज आ रही है
सर प्लीज आ रही है?
सर बोलिए सर
अच्छा ठीक है,
बोलिए
यही पूछना। हाँ
प्लीज कैरी ऑन कीजिए सर।
हाँ मेरे को नहीं सुन रहा। ओके 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 सर, ओके आई एम कंटिन्यूइंग, आई एम 10 minutes more. So insurer can to make products or add-ons available. Wider choice should be given to the insured. Simple products, easy to understand. Products can be annual, short-term, long-term, right? And package products can also be introduced to customized to suit the requirement of the insured. And there the insured should be provided with the flexibility. Then technology should be there to enable these changes. till the new products are there, the insurer will not withdraw or decline to issue the erstwhile or earlier prevalent products. These will also be sold. And insurers have been asked to develop base product which defines the minimum coverage to be given to the insured, and that has to be displayed on the website for comparison to be made by the insured, right? Documentation, no claim can be rejected for want of documents. For want of documents. So they have to be collected at the time of underwriting only. So we have to be very careful. And if any other documents are there which are relevant to the claim only, that can be asked at the time of claim. For example, DL of the person who was driving at the time of loss, permit, fitness, FIR, final report, fire brigade report, postmortem report, wage register, repair bill, etc. can be asked. Otherwise, all documents have to be collected in advance. So retail product has to specify the coverage, exclusion, limitation, what are the warranties, conditions, and applicability of condition of average under insurance, how salvage will be deducted, how it will be treated. Now, salvage has to be collected by the insurer. It is the responsibility of the insurer, and claim has to be paid in full. So all insurers are raising tenders and trying to empanel the vendors who will collect the salvage from the workshop and dispose it off accordingly. So whatever deductible or excess is there, it has to be displayed properly. And what will be the basis of settlement, total loss, partial loss, CTL, cash loss, has to be informed to the customer. Whether product is indemnity based, reinstatement basis, agreed value basis, first loss, or parametric basis based on some certain criteria, it has to be informed. So insurers are required to provide a customer information sheet containing brief details of all the features of the product, right? What is the scope of cover, sum insured, exclusion, deductibles, condition, warranties, all has to be mentioned. And with illustration wherever it is required. What is the claim procedure, our claim intimation, how it will be processed, and what are the principles on which the claim will be admissible. Sample calculations can also be provided, and grievance mechanism system should be robust and should be put in place. Every CIS should contain the list of ombudsmen having jurisdiction of the area and acknowledgement of the CIS that insured has read all the terms and conditions. All the coverage under the policy has to be obtained from the insured in physical form or digital form and kept in record. CIS may be available in local language also at the request of the insured. Now cancellation, as I told you, insured can cancel the policy at any time without giving any reason. All right. And insurer cannot cancel the policy except on the grounds of established fraud. He has to prove that the policy has been taken by fraud. In that case only he can cancel the policy by giving 7 days notice. In all other cases, we are debarred to cancel the policy. Now statutory TP cover must be there while taking this action. In case of double insurance also, you can cancel the policy, but ensure that TP cover must be there. Right? In case of total loss of the vehicle, policy has to be cancelled. And in case of refund of premium, what will be the refund of premium? In case the insured gets the policy cancelled, pro rata refund is there. Pro rata refund for annual policy. Suppose an annual policy of 12 months is taken, policy is cancelled after 8 months. 4 months pro rata premium will be refunded. If in case of long-term policy, then 4 months for the current period, and for the balance year's complete premium will be refunded. Surveyor is required to be appointed for all the claims exceeding 50,000 or more. IRDA licensed surveyor has to be professional, has to be appointed. For claims less than or estimated loss less than 50,000, no need for appointment of IRDA licensed surveyors. Currently, we are utilizing the services of loss assessing agencies and digital service providers, and in some extent, some cases, in-house surveyors also. So the surveyor appointment will be on random basis, and General Insurance Council has been preparing the techno-based platform through which the surveyors will be appointed, intimation will be given, and surveyor will be appointed based on the PIN code, his qualification, experience, type of loss, etc. And it has to be appointed within 24 hours. Surveyors are supposed to submit the report within 15 days. And after submission of report within 7 days, the decision has to be done by the insurance company. Settlement beyond this timeline will attract violation and attract penalty also. So there is a strict timeline to be adhered to by all the insurers in settlement of the claim. The insurer cannot repudiate the claim in full or part, where the breach of warranty is there and it is not relevant to the cause and nature of accident, or on account of delay in intimation. So we have to be careful by repudiating the claim. Otherwise, there will be grievance and a penalty will also be there. We have to pay more. Withdrawal of retail product, insured to be informed in advance if retail product is to be withdrawn at least 3 months before the withdrawal. He has to be informed. If the period left out is less than 3 months for any insured, his existing product should be allowed to be renewed. Long-term policy, if issued earlier, will remain in force until and unless the expiry date is there or cancelled by the insured. Redressal of grievance for policyholder insurer to have robust system of grievance redressal system to provide solution to the customer immediately. Contact details, as I have already told, have to be there for jurisdiction of the ombudsman. And ombudsman awards have to be implemented immediately to be completed within 30 days of receipt of the award. In case there is delay in implementation of the award, there is a penalty of 5,000 per day, in addition to the penal interest or penalty as per ombudsman rule 2017. So we have to be very careful in offices also. If ombudsman award is there, we have to take immediate action and comply it. Otherwise, there will be 5,000 per day penalty, very heavy penalty. So the insured must be given option to retail customer as pay as you drive, pay as you go, or pay as you use, or PAYD cover. Now it is a new concept. The insured will be having more than one vehicle, and or he will be using the vehicle less, so he should be provided with the facility to opt for PAYD. If he is driving less, then he will declare how much kilometer he will drive, and according to the number detail of this kilometer driving, his product will be offered. And comprehensive cover will also be provided with depreciation. With
Hello.
comprehensive cover should be designed, and
Namaskar,
nil depth
sir.
cover should also be there. Towing or road assistance cover should
बढ़िया
also
आप
be
now.
there. As I told you, salvage has to be disposed by the insurer. It is a responsibility of insurer. Add-on cover premium has to be shown in the policy separately for each add-on. What type of add-on cover is taken and the premium to be defined separately. IDV criteria, how it is to be decided, and depreciation to be charged for arriving at the renewal IDV is to be given to by the company to the insured, right? The PMC should approve it, and it should be published on the website also. Illustration should also be provided wherever required. Depreciation for reconditioned parts whenever used, like non-OEM or non-depreciation part. So depreciation should not be used for that. There will be use and file procedure for each company for add-on or renewal product or add new products. Insurers are provided with the environment of innovation and speed of delivery of service. Flexibility will be there. Board approved policy should be there for policy and as well as standard operating procedure. And proposal form and customer information sheet should be there. And on our website, what we have to display tag for acceptance of proposal, issuance of policy, endorsement, policy servicing, appointment of surveyor, receipt of survey report, claim settlement, and claim approval. All things have to be defined and published on the website of the company, so that insured is aware what is the TAT and it has to be administered. Secondly, list of products which we are selling and what we have withdrawn should also be properly displayed on the website. Time to time training should also be given to intermediary distribution channels and implies on the existing products, so that all are aware about the changes, and the technological enablement should also be there. Performance of surveyor should be regularly monitored as per board approved policy. Their TAT, accuracy, speed, submission of report, survey fees shall be also be paid as per their estimate and not on assessed loss. And feedback should be taken from the customer on survey and loss assessment. Policyholder protection guidelines are there as per IRDA. They have to be administered and followed, complied with. So technological based, as I have told you, GIC is working on it, and surveyors will be appointed through General Insurance Council through a technological platform without human intervention, and it will be fast to and standardized also. It will depend upon the nature of laws, department, and geography, qualification, other factors also. Random selection of job on fair and transparent basis is the principle for which this is being introduced. Customer will also be informed when the surveyor is appointed. So classification of the product will be in the form like retail product, commercial product, group business, social obligation, rural obligation, government scheme, or statutory insurance also. So under rural and social obligation, insurers are obliged to do business of goods carrying vehicle, passenger carrying vehicle, and miscellaneous commercial tractors also based on their last year's motor premium. So that percentage of premium has to be procured for these categories. Insurer shall maintain record for all these, how much these products have been sold. For underwriting acceptance, everything has to be done as per board approved policy of the company, and basis of law settlement should be properly mentioned. Policy duration can be annual, long-term, short-term. In case of SAOD, expiry date will not be beyond TP coverage. When someone was asking me this, so you have to see if that expiry date is less than 1 year, then the short-term SAOD will be issued. These are the add-on cover definitions. Extension to the existing product is done through add-on cover. Annual product is for 12 months, long term is for more than 12 months, and base product, as I told you, minimum coverage addressing the specific requirement of the insured. Package product is a product which is a combination of general and health other products also. This is all about circular. Now 5 minutes I will take. For claim, you have to see, am I audible to all of you? Hello?
Yes, sir.
Yes,
Yes,
sir.
sir. Yes, sir.
Am I audible?
Yes, sir. Yes, sir.
Yes, sir. Yes, sir. Yes, sir. You are audible.
जी.
Am I audible?
Carry on, sir. Carry on.
Can anybody unmute and
You
tell me?
are audible, sir.
You are audible,
Yes, sir.
sir.
Audible.
Hello.
You are audible, sir. You are
Sir,
audible.
Go
Audible.
ahead, sir.
Since you are
audible.
आवाज आ रही है सर, आवाज आ रही है.
जी सर.
Sir, you are audible. You can go ahead.
Nobody is responding. That's
Yeah,
why.
no. I think problem with your reception there. You are audible, sir.
You
Go
are
ahead.
clearly audible, sir. Very clearly.
For claim now,
Oh, yeah, clear.
for
Go ahead,
claim,
sir.
you have to remember this table. Tire tube, battery, airbag, 50% depreciation straightforward is applied. Fiber glass component 30, glass part nil, painting material cost 50. So wooden or metal parts up to 6 months we are charging nil, more than 6 months but less than 1 year 5%. More than 1 year but less than 2 years 10, less than 3 year 15, less than 4 year 25, and 4 years but not less than 5 year it is 35. Please correct it, 35, and more than 5 years but less than 10 years it is 40. Exceeding 10 years 50% depreciation is charged. You have to remember this depreciation table. Excess is also there for each and every claim. Excess is there. You have to see that. I will share this. Types of body claims are repair, total loss, constructive total loss or loss, theft loss due to entire vehicle, theft, partial loss due to theft, cash loss basis also. So basis of loss can be repair. If the vehicle is damaged, it can be repaired. Then cost of repair will be paid for replacement of parts and repair. Okay, IDV is not affected for repair claims. For repair claims, parts will be paid for replacement, less depreciation, less the repair cost, less salvage value, and less excess. Now, total loss is a loss when the vehicle is beyond economical repair, and when it is repaired, it will not be of the same standard and safety norms. So it is allowed to be settled as total loss claim. In case of total loss, we settle the claim as IDV minus excess, and the wreck has to be disposed of by the company, and whatever is received is accounted for in the company. Claim credited to the claim. Sometimes CTL is also there when the vehicle is damaged in such an extent, then the cost of repair is exceeding 75% of the IDV of the vehicle, then it is treated as CTL, constructive total loss. It means we pay the claim for IDV minus excess minus wreck value. Sometimes wreck is retained by the insured, so then we settle the claim on net of salvage value basis. Sometimes it is not retained by him, it is sold outside. So the wreck value will be given to the insured, and the balance of IDV minus wreck value minus excess will be paid to the insured. RC is to be cancelled as per guidelines of the IRDA. Total loss and CTL cases, RC has to be cancelled to avoid misuse of the vehicle.
Sorry, sir. Sorry.
Ignition
Sorry,
keys,
sir.
duplicate. In case of theft, we take RC book, taxation book, ignition key, duplicate key, form number 2930. Also, in case the vehicle is recovered later on, so it can be sold or disposed of or transferred in favor of any other person. Sometimes the situation is that insured is not having enough fund, and he is agreeing that he can get the repair with the second-hand parts on some other markets. So we can settle the claim in such a way to help the insured. In this way, we will be deducting some profit margin, depreciation. We will be saving the element of GST also. So cash loss can be settled. It can be on repair basis as well as on total loss basis. If it is on total loss basis, then we generally cancel the RC. Even in cases of partial loss, when cash loss is given, we generally cancel the RC, so that when again the claim is there, the insured may ask for authorized parts for the second-hand parts. Knock for knock agreement is there, for partial loss claims or NOD claims. Total loss due to theft of entire vehicle, then investigator is appointed, and the final report is taken after FIR. If it is not found, then we can settle the claim on total loss basis. Then IDV minus excess, and subrogation rights are taken from the insured. The loss may be due to theft of parts also. Suppose vehicle is stolen, later on it is recovered, parts are not there. So we can register the claim under repair and settle it as a repair claim. Now this is a question. You can see a Hero Honda bike covered under package policy. CC is 150, met with an accident on 20th May 2023. The IDV of the vehicle is 1 lakh. The date of registration of the vehicle is 1st November 2022. The repair bill is given for 7 lakhs. The bifurcation for the total loss is there. Metal part 60,000, rubber 1,000, glass part 1,000, labor 8,000. You have to calculate the liability. Am I audible? Hello?
Yes, sir. அடிக்கடி கேட்கிறாங்க. Sir, you're audible, sir.
So this is again another question. Answer for the first question will be age of the vehicle has to be seen. 6 months to 12 months. So depreciation of metal part will be 5%. And for plastic or plastic depreciation will be 50. Glass it will be nil. Hence loss claim will be payable. Metal 57,000, plastic 500, glass 1,000, labor 8,000. Excess 100 काट के 66,400 will be paid. You can see the example. A private car covered under package policy with 1358 cc met with an accident on 10th March 23. The IDV of the vehicle is 6 lakh.
Sir, one question. IDV is 2 lakh.
Date of registration of the vehicle is 1115. The total repair cost for the vehicle is 3 lakh. Bifurcation for the assessed repair loss is as under. Metal part 60,000, rubber 40, glass 30, labor charge 70, battery 60,000, painting cost 40,000. What is the claim payable for the customer? First of all, we will determine the age of the vehicle at the time of accident. It is 8 to 9. So above 5 years to 10 years, depreciation applied is 50% on 40% on metal or wooden parts. Plastic part it will be 50, glass nil. So painting, here the painting is given as full painting charge. Suppose 40,000 is given. We are not given the details of material component and labor charge. In that case, 25% of the labor painting charge will be treated as 25% of 40,000 will be treated as material component. 25% of 40,000 will be 10,000. So depreciation will be charged 50% on 10,000. That is 5,000. That is why we are allowing painting charge as 35,000. I think you have seen this and it's clear to all of you. Someone was asking about this treatment of painting. If painting charges, material component is given separately, labor charge for painting is given separately, we will be straightforward applying 50% depreciation on material component and labor charge no depreciation. If the painting charge is given in consolidated, including material and labor charge, so we will be treating 25% of that total bill as total painting charges as material component. In this case, 40,000 is the total painting charge, including material and labor. So 25,000 or 40,000 will be 10,000. 10,000 will be applicable for 50% depreciation because paint material is treated as plastic or rubber part. Other things are same. Excess up to 1500 cc is 1,000 rupees. So after working out this metal, plastic and glass parts, labor is allowed full. And then battery 50% is charged. Depreciation. Painting, as I have told you, if it put together, it is 2,21,000. After deducting excess 1,000, claim will be paid 22,000. So these are the documents which are required generally, you know, for the claim. You can see Motor Vehicle Amendment Act was there, in which it has replaced with gear vehicle two-wheeler as 50 cc. A medium or heavy goods passenger carrying vehicle were known as transport vehicle. So as per section 39 of the Motor Vehicle Act, no vehicle can be used on the road without proper registration. It has to be registered. It is the duty of the insured. If the vehicle is sold, then within 14 days, the transferee has to apply for change of ownership. If the vehicle is sold outside, then 45 days time is given. IRD regulation, mostly we have discussed, you can see. Delayed of payment, delayed of claim payment attracts interest at the rate of 2% above the bank rates. And penalty is also there. Now, Ombudsman award is delayed. You have seen that. In case of total loss claim, suppose it is there, then the insured has to be given the option to retain the salvage. We ask him to give the quote for retaining the salvage and also obtain the same from market. Then we will give the we will deduct the cost of salvage or wreck as per the highest bidder. Means insured has to be contacted if he is interested to retain the salvage. Another question is there. You can practice. I will share the same. This is another question.
Sir, kindly send this question on the upload.
Hello.
My system. All are able to hear. Can you guide me how to? Why it is not working? All are you are able to see the screen and hear me?
Yes.
No problem. Okay. Okay. No speaker off. Laptop, sir. Laptop. Headphone is not there now. I'm talking directly through this laptop speaker only. Anand knows. Anand can help. Anand, can you help me? My voice is, I'm not able to hear the voice of the participants. I'm not able to get the voice from them. My voice is going. I'm not able to listen to them. Can you tell me how this audio? Audio is there. Hello. Why it is not coming? Hello. Sir, up to what time our class is there? Hello, Ramesh sir. Up to what time? Up to what time class is there? No problem. But the situation is that I'm not able to interact. Just pause. Hello. Okay. I can share this presentation with you.
Okay, sir.
Okay. Okay, sir. Okay, sir. I think I have covered most of the things, and this practice session I will share with all. They can share.
Here are the slides, sir. All first slide. And any numerical also.
Why it is not coming, sir?
ஹலோ ஏதோ அவர் கேட்கலையா பேசுறது நீங்க பேசுறது அதுதான் குட் ஆடியோ சார்
Yeah. Okay.
You select this one, Samus microscope.
This. Hello. Am I audible?
Yeah.
Yes, sir.
Yes, sir.
Yes, sir.
Am I audible?
Yes, sir.
Yes.
हाँ सर ऑडिबल है आप
Am I audible?
You are audible, sir.
Yes.
Yes, sir. I have checked the setting also. In audio. Hello. This one. Yes, Ramesh sir. I have done whatever you suggested.
Sir, video is stopped. Okay.
Okay, sir. Right. Yes. For the next class also. Okay, sir. Thank you. So return to invoice example is there. ID is 19,60,000. It is fixed as per GR8. Model is 2016 Mercedes, and invoice value is 24,50,000. 24.50 invoice value. Road tax registration charge is also there. And in case of total loss, how much claim will be paid? We will pay 24,50,000. That is the IDV plus the difference between IDV and invoice price. So if we put together, then this will be the total claim. We are also paying road tax and registration for 10%. So 10% is added. So it will be different from company to company. This is how we are assessing loss on return to invoice. Seema was driving her Hero Honda Amaze private car. Number is this. The steering rod of the vehicle got broke down and she lost the control over the vehicle. The vehicle dashed against a tree and resulted in frontal damage. The surveyor assessed the loss as under windscreen damage, sealant kit, molding, front bumper, grill, radiator, condenser, painting chart 12,000, headlamps for 4,000, indicator 700, fender 3,500. And labor charges for opening and fitting 2,500. So if you ask to work out the liability, how much will the claim payable? It's a package policy without nil depreciation cover. Means nil depreciation cover is not there. It means depreciation will have to be applied. Cubic capacity is 1,400. It means 1,000 will be the excess. Model is 2022. From model, you have to calculate the age of the vehicle till the date of accident and apply the depreciation. The main thing is here that steering rod got damaged, broken down, and the loss took place. So loss or damage for the steering rod will not be paid, and all other things will be paid as per depreciation table. You will apply an excess and settle the claim. MISP guideline is also there. Motor automobile dealers can also provide insurance service to the customers, sell insurance products. So as per MISP guidelines,
Sir, may I
they will
interrupt?
be enrolled. They
Excuse
have
me,
to put
sir.
one
May I
designated
interrupt?
person having the 12th class
Hello?
of education. He has
Sir?
to undergo for training for 1 week, obtain the certificate, and for 7 years he has to keep the record. All the code of conduct of the MISP will be maintained. He will not force the insured to go for any peculiar company. He will offer all the companies to the insured with all the products and price. Whatever is decided by the insured, he can take.
Sir?
The MISP will help the insured in getting the endorsement done and also provide cashless service to insurance companies. Earlier, fixed fees was paid to the MISP. For two-wheeler, 22.5% of OD premium, and in case of private car, 19.5%. But now there is no limit after expense of management regulation
And he's not
2023
able to hear.
after April. So it is the board approved policy of the company. Whatever they decide, they can give the MISP commission.
Sir, one query.
Intermediary as well as the insurance company both can appoint the MISP.
Sir is not audible to hear.
An MISP can be enrolled with any number of companies. One question is important. Yash was insured, is having private car Maruti Suzuki. Number is there, 2015 model. Cubic capacity less than 1,000. CNG is fitted. Under package policy, it is covered. There is without nil depreciation cover, and it is covered with your rental insurance for the period of 1 year, 2023. On 15th June 2023, during night, the vehicle caught fire and vehicle got extensively damaged. IDV of the vehicle is 1,85,000. Estimate of repair given by the repairer is 2,43,000, including parts and labor. Surveyor assessed the loss for 2 lakh before excess and salvage. Rupees 2,000 is the salvage. Repair liability on repair liability. Rec value comes to 55,000 on as is where is basis. Find out the liability of the insurance company. In this case, we have to see, as I told you, whatever mode of loss is economical to the company, that will be taken into consideration by the company. Here, the vehicle is 2015 model and repair liability is coming 2 lakh less salvage. 2 lakh salvage means 1,90,000 2 lakh minus 2,000 and excess 1,000. 2 lakh minus 3,000, 1,97,000. And now you have to see what is the 75% of the IDV. 75% of IDV of 1,85,000 is 1,38,750. Since the IDV or since the repair liability is more than 75% of the IDV, we will treat it as constructive total loss because it will be more economical to the company. So what we will be paying in this case, 1,85,000, 1,85,000 minus excess 1,000 minus rack value 1,29,000. Since 1,29,000 is less than 1,38,000, so it will be economical for the company to go in for constructive total loss claim. So this loss will be settled on constructive total loss basis. RC will be cancelled and rack will be sold. And in case the insured wants to retain the salvage, we can reduce the 55,000 from the final claim amount. If it is to be sold outside, we will sell it outside and give the proceeds to the insured, and the balance will be paid by us. That will be net of salvage basis. So it is important. Sometimes questions are there in the exam. They will test whether what will be the final liability of the company. You will have to evaluate from repair liability point of view as well as CTL. I think you must have understood the concept. So I will be sharing these questions also with you since I am not able to interact now. Some audio problem is there. So you can work out in case any problem is there. We can also interact at any other time, as Ramesh sir will tell. Hope the session was quite useful to all of you. I have tried to touch upon all the important aspects from exam point of view. So I request all of you to go through the tariff, all these guidelines, and practice well. So I wish you all the very best for best performance in your exam and successful promotion. Thank you.
Thank you very much, sir. To all participants, shortly, sir will share all these PowerPoint slides and other material with us. We will be uploading it on our website, uioa.in. You can go and download it from there. Thank you very much, sir.
Thank you.
Leave.